interact with each other. We are looking forward to a very highly interactive session. Our session today is themed MONEYWISE, Policy Innovations to Finance Africa's Agri-Food Systems. And we have an exciting lineup of speakers who will be sharing their perspectives and insights on this very important topic. We also have government leaders and experts from several African countries, some of which are our case study countries for this report. So we are looking forward to an engaging conversation. Without further ado, let me welcome you to part one of the session for the welcome remarks from our various speakers. I will now invite Dr. Ousmane Badiane, who is the Executive Chairperson at Academia 2063 and co-chair of the Malabo Montpellier panel, for his remarks.
Thank you, Lai. Ladies and gentlemen, and everybody who's joining us here today, a warm welcome to the 16th edition of the Malabo Montpellier panel report launch under the auspices of the Malabo Montpellier Forum. We are happy and pleased to be joined by our outgoing co-chair, who spent a lot of years guiding us here and supporting the work of the panel, His Excellency Prime Minister Hailemariam Desalegn. We appreciate, sir, all you've done to get us so far. In my name and the name of my co-chair, Joachim, and everybody around the Malabo Montpellier panel, thank you, Mr. Ganallo. I would also like to express a warm welcome to everybody who's joining us here from the panel members, those who are on the agenda and those who are following the program here today. Thank you for your work and contribution. To everybody else, our many friends who have, over the last few years, 8 and counting, have faithfully been at our events, welcome, and to the new friends who are joining us here today. The work of the Malabo Montpellier panel is located in a very specific niche of the development policy, food system policy landscape across the continent. We do research like very many institutions, but we really have a very specific focus, which is to try and understand positive change across the continent and dig deep to figure out what is being done by governments in countries that allow this positive change to take place. We develop a methodology in a specific, focusing on a specific topic that is of strategic importance to the African agenda. We develop a methodology to rank countries, take the top 4 to 6 countries, go there and look deep to see what is their government doing in terms of institutional innovation, policy reform, and government intervention to allow their countries to move ahead. And this topic here, focusing on food system finances, couldn't be more timely. We just adopted in January the Kampala CADEP Declaration, which has the ambitious aspiration of mobilizing $100 billion for the funding of the food system needs, $100 billion public and private combined. It also has called on African countries to allocate and invest back into agriculture about 15% of the agricultural GDP. Last time I looked, in constant terms, the ag GDP in Africa is close to $500 billion, about 500 billion. If countries were to meet that goal of 15%, that will take us in current terms close to 75 billion. And in current, in constant terms, in current terms, probably close to 100 billion alone just from public expending. So those goals are possible. And what this report is going to do is basically to show how some countries ahead of the pack are mobilizing resources from private and public for their food systems. So thank you again, everybody, for joining us. And back to you, Dr. Butake, for the next steps of this agenda today. welcome everybody again. Thank you.
Dr. Bajan, thank you. Thank you for setting the context of this very important conversation. I will now move on to our co-chair of the Malabo Montpellier panel at the Center for Development Research, ZEF University of Bonn, Professor Joachim von Braun.
Thank you, Dr. Butaka. Excellencies, ladies and gentlemen, colleagues, picking our agenda is art and science. I think our panel did well again this time, picking this Malabo Montpellier panel report on financing for the following reasons. I emphasize what Usman already said, partly. Number one, the debt relief issues are back on the agenda and need urgent addressing. Number two, there are fundamental changes in the development aid agenda that require re-strategizing. Number three, climate finance needs to be connected to food systems transformations finance. Number four, on the positive side, we know so much better what investments in agri-food systems transformations do pay off. So the efficiency of connecting finance to investment has a much bigger potential. And fifth, there were last month the United Nations Food Systems Summit +4 in Addis Ababa with a lot of emphasis on finance and investment, and the International Conference on Financing for Development in Seville, Spain. Both of these conferences offered relevant action agendas. The action areas of the International Conference on Financing for Development and the United Nations Food Systems Summit in Addis Ababa will be presented to the UN General Assembly. Some of their main points are domestic public resource mobilization, private capital mobilization with financial incentives, debt and debt sustainability issues, and science, technology, and innovations and capacity building in the field of finance. So what does our report add to this broad set of agendas? It adds with innovations and precision and Africa focus for financing food systems transformation. I want to selectively highlight 2 points that we shall call for and that will be elaborated today in this important meeting. Number one, I want to highlight the need for aligning agri-food financing with integrated rural development, including health, education, and infrastructure. This is not sufficiently addressed in the conference action areas of the Seville conference on global development financing, but it matters a lot in Africa, the aligning of agri-food financing with integrated rural development. You will hear more about that. And number two, raising awareness of new financial products among key stakeholders across the continent of Africa, including policymakers and private sector actors. That is crucial for creating an enabling environment for effective funding mechanisms to support the agri-food systems. Excellencies, ladies and gentlemen, it is now my great honor to call on you, Excellency Haile Mariam Desalegn, the outgoing co-chair of the MAMO Forum. Dear Haile Mariam, you have served for many years very effectively as co-chair of the forum with great commitment. You have broadened our network, our reach in tremendous ways because your voice counts as an African leader across the whole continent. You served as Prime Minister of Ethiopia from 2012 to 2018, and then you were kind enough to join us as co-chair. You have many other responsibilities which kept you busy, but you remained committed to the Malabo Montpellier panel. Dear Haile Mariam, thank you for your service to MAMO Forum. You have kindly accepted to be listed as emeritus co-chair of the forum, and we would be grateful for your advice also in the future. Please take the floor now.
Thank you so much, Professor Joachim. First of all, ladies and gentlemen, Forum co-chairs, Her Excellency Dr. Ambassador Asia Ben Salah Alawi and His Excellency Dr. Ibrahim Mayaki, honorable ministers and senior representatives of the African countries present here today, dear panel co-chairs, yourself, Professor Von Braun and Dr. Baidani, and members of the Malabo Montpellier panel, all protocols observed. It is a great honor as an outgoing co-chair to also welcome you all to the 16th Malabo Montpellier Forum. Thank you, Professor Joachim, for giving me the opportunity to serve as Emeritus co-chair. Today marks a significant step forward in our shared commitment to transform Africa's agri-food systems, as this lies at the heart of our continent's economic resilience, food security, and sustainable development. The Malabo Montpellier Forum provides a platform to facilitate dialogue and exchange among high-level decision makers on African agriculture, nutrition, and food security to promote policy innovation using evidence produced by the panel. The Malabo Montpellier panel's report titled MONEYWISE, Policy Innovations to Finance Africa's Agri-Food Systems is very timely. It speaks to one of the most critical levers for agri-food transformation, which is financing, which many African countries suffer from. We know that Africa's agri-food systems hold immense potential for improving nutrition, achieving climate resilience, and more. But this potential will remain unrealized unless we address the financing gap that continues to hinder progress at scale. This MAMO panel report does more than highlight the challenge. It provides evidence, innovations, and country case studies that show what is possible, which reminds us that transformation is already taking shape on the continent, and there are some best practices as well. But we must now go further. We must scale what works, reform what doesn't, and mobilize all sources of finance in a more coordinated and strategic way. The MAMO panel's report is a call to action, a call to align our financing efforts with the ambitions of the African Union Agenda 2063, the Kampala Declaration, and our national development plans. Let us seize this moment to commit to financing agri-food systems not as a sectoral issue, but as a driver of a structural transformation across our continent. As I conclude my remarks, I would like to say that it has been a great honor serving as the MAMO Forum co-chair. It has indeed been an immense pleasure contributing to the panel's report, which I helped shape national policies across Africa, contributing to the progress in areas such as food processing, nutrition, and building climate-resilient agriculture, as well as youth and women empowerment in agri-systems. I commend the panel's report, which also helped me a lot in steering the Pan-African institution, AGRA. I warmly welcome and confidently pass the baton to His Excellency Dr. Ibrahim Mayaki, whose impeccable vision will further accelerate the progress made by the Malabo Montpellier panel and the forum. I also look forward to continuing my support to MAMO panel. Before that, I would like also to thank the co-chair, Dr. Alawi, who worked with me on co-chairing MAMO Forum. And I thank you also as the Honorable Emeritus co-chair of the MAMO Forum. I thank the Malabo Montpellier panel and all the partners who have made today possible. And I look forward to the discussions ahead and to learning from the insights you'll all bring. Africans and Friends of Africa has contributed a lot, and I wish all of you a successful deliberations in this panel as well as the future panels. I thank you and God bless you all.
Your Excellency, thank you so much for your insights, for those powerful remarks. We appreciate your leadership and your support, and we look forward to a continued collaboration with you and your office. We are about to move on to the presentation of the findings from the 16th report by the Malabo Montpellier panel. And before I invite our presenters, I will invite all our participants to click the link shared in the chat to join the Malabo Montpellier panel's mailing list in order to keep abreast of all the research and activities by the panel. With that, we are now moving on to get into the details of the research presented in this report. And for this, we have 3 speakers. First up, we have Mr. Ishmael Sunga. He's a member of the Malabo Montpellier panel and CEO of the South African Confederation of Agricultural Unions. Then we have Dr. Aisha Nakito, who is the head of the Policy Innovation Unit and Malabo Montpellier panel program lead at Academia 2063. And then we have Dr. Agnes Kalibata, former president of AGRA and member of the Malabo Montpellier panel. So our first speaker for this presentation will be Mr. Ishmael Sunga. Welcome.
Thank you, Program Director. Can you hear me?
Yes, we can hear you.
Thank you so much. It's indeed a pleasure for me to be able to present to you part 1 of this report. Let me dive into the slides now. Can we please go to the my slides? Part 2. Right, here we start. Financing agri-food systems. Why does it matter? It does matter for several interconnected reasons. One is to achieve food security and encourage the consumption of healthier diets. Secondly, to promote sustainable land use and prevent land degradation. Then thirdly, to improve livelihoods through employment generation and increase entrepreneurship in agricultural value chains, according to studies. However, the estimated share of Africa's population that cannot afford a healthy nutrition and adequate diet is around 60%, according to the FSD report. This is linked to poverty, high relative food prices, and weak preferences for specific healthy foods. The total cost per year of land degradation in Africa and both south of the Sahara is estimated at around $60 billion, while approximately $133 billion annually is needed to offset the cost of this degradation, according to a study done. Similarly, increasing the opportunities for obtaining sustainable livelihoods in agri-food systems is particularly important for Africa's youth. Annually, 11 million young people now join the African labor market, but only approximately 3.7 jobs are created, according to a panel report that was produced in 2024. Financing Africa's agri-food system is thus very crucial for their sustainable growth, leading to inclusive economic growth and climate resilience. We can move over to the next slide, please, which is about a policy imperative for Africa. A matter of concern and reason for this report is that although government spending on agriculture in Africa has increased in absolute terms in recent years, the share of total government expenditure on the sector has steadily gone down over the years. This graph that we see before us illustrates that government expenditure rose from 138 billion in 1990 to 235 billion US dollars in 2014, and further grew to USD 449 billion in 2023. However, agricultural share of total government expenditure in Africa dropped from 6% in 1990 to 4.2% in 2000, to 2.9% in 2014, to 2.7% in 2023. To foster agri-food transformation on the continent, African heads of states approved the Kampala Declaration in 2025 January. This commitment aims to mobilize USD 100 billion in public and private sector investments by 2023. The Kampala Declaration also reaffirms that all African countries should ensure that at least 10% of the annual expenditure is allocated to agri-food systems, a commitment that was first made in Maputo in 2023. Achieving these targets will require re-engineering the current financing architecture for agri-food systems in Africa to increase resource mobilization by expanding domestic public financing, international development financing, and private sector investments. We can go to the next slide, please. Funding streams. Essentially, they are as highlighted on the slide there. As we have seen, achieving sustainable and inclusive agri-food systems largely depends on proper financing and investment. To attain the Kampala Declaration targets, we will require re-engineering the current financing architecture for agri-food systems in Africa to increase resource mobilization. These may be obtained from one or a mix of these four sources that are highlighted there, namely domestic public spending, foreign public spending, including official development assistance, domestic private sector spending, and foreign direct private investment spending, including that of multinational corporations. These sources can provide financing through various instruments for short or long-term interventions on commercial or concessional terms, including grants or loans at below market rate. Such financing and investment primarily falls under 5 interconnected expenditure components, as shown in this diagram: agricultural development and value chains, infrastructure for food systems, nutrition and health, social assistance, including emergency food assistance, and climate change and natural resources management. Next slide, please. Unlocking agri-food finance, key constraints and needs. There are quite a few of them. I will select a couple of them just to highlight, but as we can see from the slide, they range from smallholder farmers and goes on to governance and regulatory frameworks. I will talk briefly about 2 of them, perhaps. The first one, smallholder farmers. Usually face upfront costs, substantial upfront costs associated with machinery, which are often prohibitive, especially for farmers who lack collateral or credit history. These barriers lead many to rely on personal savings or informal lending sources to finance such investment. As we are all aware, you cannot grow on the back of your savings. You have to grow on the back of some credit provision, as is typically the case. Then let me talk about young agripreneurs. Despite many possessing considerable professional education and vocational training, young agripreneurs across Africa frequently struggle to access the affordable financing needed to build agri-food business ventures. Only about 30% of the youth in sub-Saharan Africa engage with formal banking services. Their limited and engagement with banks results in insufficient data on the financial behavior of these young agripreneurs, reinforcing lenders' perceptions that they are high-risk clients. Youth also often lack adequate collateral or formal land ownership, both of which are often prerequisites for securing loans. I jump on to limited financial literacy, which is self-explanatory, particularly as it relates to the majority of farmers that farming the land in sub-Saharan Africa. There's also, of course, limited resources for innovative funding, particularly given that the rural development markets, financial markets are not yet that advanced. It is also important to highlight a key point around climate change concerns, and transitioning to climate resilient agriculture requires substantial investment in improved practices, such as increased adoption of drought resilient crops, and sustainable crop, land, and water management practices. To ensure the long-term agricultural sustainability, investment in scaling up climate adaptation measures needs to be increased. There are also complementary things that I can quickly go on, including governance and regulatory frameworks such as continued barriers or absence of frameworks to adapt the generic regulatory frameworks, banks to special conditions that affect the agri-food systems. We can also go to complementary issues around backbone infrastructure, such as roads, electricity, and access to digital technology. Lastly, let me go on to the last slide, which is strategic interventions. Highlighted again is a picture of the different options. Let me quickly go through a couple of them. The first one is as an example of strategic interventions is innovative digital financial technologies, fintech, that are helping overcome the access challenge by expanding financial inclusion through mobile payments, digital loans, and insurance, all of which lower transaction costs and improve transparency. The second important highlight is related to public-private partnerships, which offer strategic opportunities to mobilize investment, foster innovation, and achieve development and economic impact across Africa's agri-food systems at a large scale. Private-public partnerships can align government policy goals with private sector efficiency and investment by sharing risks, costs, and responsibilities between governments and the private sector. Public-private partnerships can unlock financing for crucial agri-food infrastructure, including cold chains, rural roads, storage, irrigation systems, and renewable energy for agri-food processing. Lastly, let me also highlight the importance of unlocking greater private sector participation through regulatory policy and regulatory reforms, so that we're able to innovatively deal with risk reduction as well as ensure that there is sufficiently patient capital to be deployed. There are several new mechanisms that have emerged to incentivize private investment, including blended finance, impact investments, crowdfunding, and fintech, to be effective and provide good returns on any investments. Most of them require an enabling environment to operate. Stable investment climate, public-private partnerships, and tax incentives significantly increase the amount of financing available to agribusinesses, and also targeting financing mechanisms that address systemic barriers faced by particularly young and women will enhance inclusivity in agri-food systems, such as matching grants. And this is very fundamental. Last couple of points to highlight before I hand over to the next presenter is really strengthening the investment mobilization in Africa's food systems through utilization of regional investment platforms like Africa Investment Forum, which is led by the African Development Bank, that connects project developers, sponsors, governments, and institutional investors to drive transformative investments across Africa. I end here. Quick highlights, and let me hand over to the next presenter to take us through the next session, part 3. Thank you very much. Over to you.
Thank you very much, Mr. Sunga, for the very informative presentation emphasizing the need for innovative financing mechanisms for agri-food systems transformation. I will be sharing some lessons from country case studies from the report. But first, I would like to briefly go through the methodology used by the Malabo Montpellier panel in selecting the country case studies. We know from data that African countries vary significantly in terms of public and private investment in agri-food systems, as well as in institutional capacities and outcomes. As such, identifying countries that are making tangible progress in mobilizing and effectively financing the transformation of their agri-food systems is essential. This is for informing and directing national and regional investment strategies to scale up best practices. So such identification needs to go beyond simple spending levels, hence the need to incorporate a broader set of indicators that reflect both the quality and the investments and the results they yield. As shown here, there are indicators grouped in 3 categories. That is public finance, private finance, and the impact of financing agri-food systems. So I'll briefly go through these indicators. The first one is the government agriculture expenditure as a percentage of agriculture value added, which measures how a country is investing in agriculture relative to the size of the sector. And here agriculture is an indicator that includes agriculture, food, forestry, and fisheries subsectors. Next is the government agriculture expenditure as a share of total government spending, which indicates the level of priority accorded to agriculture in national budgeting processes. The share of public resources allocated to agriculture demonstrates the priority the sector holds in national fiscal planning and signals what priority is given to agri-food systems transformation. And then the foreign direct investment inflows to agriculture is an indicator that reflects the attractiveness of a country's agri-food sector to international investors. High FDI inflows to agriculture demonstrate investor confidence in the enabling environment of that given country and the potential for strong returns on investment in the agriculture sector. So this is the kind of investment that can support infrastructure expansion, technology adoption, and agribusiness growth. And then the fourth one is agriculture value added per hectare of agricultural land. It shows the economic return generated from each unit of land. In other words, it's a strong proxy for productivity. Improvements in this indicator suggest successful adoption of innovations, inputs, and better land use practices as a result of financial investments. And lastly, here we have the cost of a healthy diet in purchasing power parity, dollars per person per day. This is an outcome indicator capturing the affordability and accessibility of nutritious food in a country. So countries that have managed to lower this cost are likely making headway in improving their agri-food systems, market access, and agri-food supply chains. This metric is essential for tracking progress of food security and nutrition. So together, these 5 national indicators inform us about the outcome of mobilizing finance for agri-food system, assuming that the enhanced investment facilitated by finance shows its impact for the agri-food system transformation. So next, after identifying these indicators, the indicators were then compared in 3 steps to rank and select countries based on their performance. Next slide, please. And so here, kindly note that countries that did not have data for the reference period of 2018 to 2022 were not included in the analysis. So with step 1, this was to identify countries that ranked high in government agriculture expenditure as a share of agriculture value added and as a share of total government expenditure. So, and then here you can see some countries that were selected following step 1. And then step 2, amongst the countries in step 1, we then identified the countries that ranked high in FDI inflow to agriculture, forestry, and fishing subsectors. And the countries here, we selected Malawi, Morocco, and Rwanda. Next slide, please. Step 3, looking at the impact of financing agri-food systems, countries were then selected based on those that ranked high in agriculture value added per hectare, and those who had low cost of a healthy diet. And from step 2, it shows that Malawi, Rwanda, and Morocco had these qualities, that is a high agriculture value added per hectare and low cost of a healthy diet. So these were the countries selected for case studies. Next, please. Okay, starting with Malawi. Malawi aligns policy, programmatic, and institutional efforts to strengthen financing for agri-food systems transformation. So looking at the National Economic Empowerment Fund, its core objective is to provide affordable and sustainable sustainable financial services to economically empower marginalized populations. So here we include the women, youth, and persons with disabilities to support rural economic development and agricultural commercialization. And so the fund is primarily financed through government, with the additional sustainability achieved through a revolving loan model, which maintains capital by reinvesting repayments. In fact, the fund was revamped, the institution was revamped, and is recognized for its high repayment rates, which we have around 85% nationally, making its operations sustainable and scalable. And to focus its efforts on fostering inclusive financial access, NEAF launched an $11 million youth and women loan program in 2020. The fund also has other examples of financial products, for example, the cooperative loans and micro-industry loans. These target individuals who have acquired skills from different institutions, say universities, or have undergone government internships to enhance their capacity to establish agribusinesses. And then we have the Export Development Fund, which is government funded and managed by the Reserve Bank of Malawi. So to support or promote structured markets and enable traders to meet viable export contracts, the Export Development Fund provides warehouse receipt financing to ease liquidity challenges. And for example, we can see here that from 2014 to 2022, EDF approved loans totaling to over $1 million, and this resulted to a creation of about 4,000 jobs. And in the same period, the fund also approved over $1 million through the Construction and Export Manufacturing Guarantee Facility. This was to bridge the financing gaps faced by the agro-processors and light manufacturing enterprises. So this helped to bridge to expand processing capacity and also to enhance the global competitiveness of Malawi's agriculture exports. More examples are shown here, but also to show its inclusivity, we can see that since inception, it created over 42,000 jobs, and 51% of these went to women and also young people. Next, please. The one before that. You're in Morocco, please move back to Malawi. The one before that, yes. Okay, so still with Malawi, the Skills Development Fund was implemented by the Ministry of Finance with funding of nearly $41 million. So that's SDP program was a very major investment in Malawi's human capital. It targeted sectors like agriculture, ICT, engineering, and entrepreneurship. Particular emphasis was placed on youth and rural communities with vocational and technical skills to support employment and job creation within the country's growing value chains. And by the time of completion, it had actually exceeded its enrollment targets by 65%. With the support of the Higher Education Students Loans and Grants Board, which actually its establishment was supported by the project, it enabled about over 42,000 students to access higher education loans. And this enabled them to afford higher education better and also to expand agriculture-focused programs. It also developed 52 new academic programs in the fields of science education, agriculture extension, agriculture economics, among others, and to ensure that they were relevant to the market demands, these programs were designed in partnership with the private sector to enable effective closure of skilling gaps. It's also important to note that more than 80% of the project's funding went to infrastructure development, where we have establishment of lecture halls, science labs, open and distance learning hubs, as well as satellite centers, which help to expand the reach of agriculture education and also in training agriculture industry disciplines. So you may ask that what happened to the students after leaving this project? So most of the graduates from the institutions supported by this project are now playing a key role in improving productivity, processing efficiency, and nutrition outcomes in Malawi's agri-food systems. This has been reported. So the enhanced training created new opportunities for youth employment and rural economic growth, reinforcing national priorities of Malawi 2063. And the last initiative we would like to highlight here is the Agricultural Commercialization Project, which is a flagship for the Malawi government. Just to go through a few, we have that after the completion of the first phase, over 5,000 agriculture machines were given out, which improved post-harvest handling and storage. And as a result, beneficiary groups reported increased yields, improved product quality, and also better market access, contributing to higher gross sales and incomes. And another key point here is that the project established over 100 agro-processing units and supported activities of over 360 cooperatives. So overall, it enhanced the livelihoods and availed employment to nearly 75,000 households. So the project closely aligned with the goals, again, for Malawi 2063, and especially regarding wealth creation, food security, and rural transformation. And now we move on to get some lessons from Morocco. Next slide, please. So we would like to see Morocco's innovative financing instruments, and as well as what they did to strengthen their PPPs. So Agriculture Development Fund in Morocco utilizes the public resources to crowd in private finance. This is, for example, by providing subsidies.
Okay, I have found this on the web for people.
Sorry, it subsidizes private investment in land restoration, irrigation systems, and agri-processing. FDA also provides post-investment subsidies covering about 70% to 100% of costs of key agriculture inputs like machinery and certified seeds. So afterwards, the funds are actually reimbursed to farmers following verification of their investment. And of course, the introduction of the digital service delivery of grants and loans further strengthened the process of inclusivity. It enhanced the transparency, speeds up subsidiary disbursement, and also strengthens financial governance, making the fund more attractive to public and private investors alike. And turmoil which is Malawi's National Credit Guarantee and Financing Agency, also provides innovative finance instruments and initiatives. If we look at, for example, the Green Investment Program, this one supports environmentally sustainable investments and contributes up to 40% of each loan with flexible terms of repayment, about up to 12 years duration, and also a grace period. So this reduces the bank's exposure and de-risks private investment in climate resilient agri-food systems, while also promoting green innovation and financial innovation. So we'll move on to the next slide, please. Yes, another example from Morocco is the Agency for Agricultural Development, which plays a catalytic role in mobilizing private investment. Here, it does so by reducing risk and also improving project bankability. For example, in 2008 up to 2020, over 1,500 PPPs were implemented, and they attracted over 2.2 billion USD in investment and created 63,000 jobs. As we can see, the impact was really significant. And then it's also accredited by the Green Climate Fund, which enables it to have direct access to international climate finance. Then, and the last one we'd like to see in Morocco is the Green Morocco Plan, which was Morocco's flagship agriculture reform strategy. This strategy was actually very successful, and as we can see here, over its implementation period, it's provided an increased budget for the Ministry of Agriculture, rising from 150 million euros to 680 million euros as the budget for the ministry. And also we can see that the public commitment, coupled with targeted subsidies and credit lines with FDA, it catalyzed over 7.1 billion USD in private investment. And through this strategy, agriculture GDP, agri-food sector value added increased from 7.3 billion to 14 billion USD, and agri-food exports more than doubled during that period. And its successor, which is the Green Generation Strategy, was launched and has also so far performed well, attracting international support. For example, this is exemplified by the investment of 250 million USD for the Green Generation Program for Results project. And lastly, we would like to look at the lessons from Rwanda. Next, please. Yes, as also shared from Morocco and Malawi, Rwanda has done a lot to ensure that they have increased funding to agri-food systems. This is through some of the financing institutions and also some projects that have been implemented. So, for example, the Business Development Fund tries to streamline government and donor grant support to support SMEs and individual entrepreneurs in order to support them in in expanding their startups, or even having their skills developed. And then, so the government of Rwanda, for example, supports SMEs through this bank to more readily access commercial financing and to also obtain business advisory services. And looking at the profile of this fund, 65% of it is associated with agricultural projects. For example, the fund disbursed about 3.9 million USD in grants to Rwanda Dairy Development Program, and also the Post-Harvest Agribusiness Support Project, which support farmers and rural entrepreneurs in various dairy and post-harvest crop management and value addition activities. Another institution is the Development Bank of Rwanda, which also supports in closing the gaps of the persistent negative perception of funding agricultural ventures. For example, most of the commercial banks felt it's risky to fund ventures involved in agri-food systems. So that's where this bank comes in to close this gap. And as a solution, some of the interventions implemented by BRD include helping and giving about 16 million USD in loans to the various projects. And moving on to the commercialization and de-risking project, the government of Rwanda is implementing projects to accelerate private sector-led growth and poverty reduction. So through this project, for example, which has a funding of 300 million USD, 61.5 of this was given to BRD to promote investment in agriculture sector and to increase access for credit for farmers and also the agriculture-based SMEs. And lastly but not least is the Village Savings and Loans Associations. These are actually immense in Rwanda, which is really helping to close the financial gaps in rural communities. As we can see here, it has improved financial access by about 92,000 smallholders, and this has led to a total saving of about 35 million USD. So these are some of the examples from the country case studies, which can be scaled up or replicated by the other African countries that are looking towards closing similar such barriers as explained by Mr. Sunga in the first presentation. I'll now like to welcome Dr. Agnes Kalibata for the next part of the presentation. Thank you.
Can you hear me?
Yes, Dr. Kalibata, we can hear you.
Okay.
Dr. Kalibata? Dr. Kalibata, at this time, we cannot hear you.
I think a link dropped. Probably she'll have to reconnect.
Okay, I still see her here. Oh, she dropped.
She's
coming back.
Now she's back.
Hello, can you hear me?
Yes, ma'am, we can hear you.
Sorry, I think I dropped.
Yeah.
Good morning. Good morning. Let me start by recognizing Your Excellencies, the co-chairs of the panel. It's good to see Your Excellency Haile Mariam, Your Excellency Dr. Mayaki, and Your Excellency Asia. My job is a little bit easier because the biggest part of the presentation has been made by the two panelists. Mine is to really focus on how we go forward and the type of action agenda we take forward. And I wanted to call two things here that are very critical as we go into this agenda. We come at this report when we've just launched the SOFI report last week at the Food Systems Summit, where hunger is marginally decreasing globally, but it is actually increasing on the African continent. 6 out of 10 people that are hungry are on the African continent. Then we are also, as Professor Joachim said, and I think His Excellency Haile Mariam said, we are in a very difficult financing environment. So these two things really make it impossible for us to do anything without thinking how we start mobilizing resources differently. And the report calls out 5 areas that are very critical to how we mobilize resources differently. The first one is unlocking domestic financing. The second one is increasing awareness and knowledge of funding instruments, and I'll go through these individually. The third is building institutional capacities so that we can mobilize resources easier locally. The fourth is bridging the gap to formal banking. And the last one, as Professor Joachim called out, is aligning agri-food systems with integrated rural development. So let's zoom in. And this is really, again, intended to support our leaders on the call and to support leaders that will read this report so that they have a set of tools that they can use going forward. I will not go into individual examples of these instruments that we are calling, or these recommendations that we are calling, because they've already been cited by the two speakers before me. I'll just zoom into the areas of action that would make a difference if we implemented them. The first one on unlocking domestic financing through incentives, de-risking, and partnerships recognizes that if we make incentives available through local financial institutions to invest in agri-food systems, we could make a difference for SMEs and businesses that are trying to invest in this ecosystem, especially because this is a sector that is considered risky. Deploying de-risking tools like credit guarantees has already been called upon by the previous speaker and has shown areas where it has worked and made a difference. Enhancing bankability by improving access to finance for smallholder farmers through ensuring land tenure reforms that ensure that farmers are bankable, ensuring that smart subsidies help find and support farmers' own resources, and then strong cooperatives that make it possible for people to believe in what farmers and what type of groups farmers have, and improve actually the bankability of farmers. All these have been cited and examples exist on the ground. Developing transparent, goal-aligned partnerships, PPPs, frameworks that have clear incentives and for private sector engagement. One good example here that I must call out is what you see, what AGRA has done in what they call the consortia engagement, where different private sector partners are brought together, all of them doing different things, all of them funding different things, but because they have a platform that improves transparency and improves alignment, actually does allow investments to take place. Let's go to the next slide. This slide focuses on increasing awareness and knowledge of innovative funding instruments. I think it was called out by Usman on making sure that people understand the new place of climate financing. We have a lot of instruments now under climate financing, but a lot of countries don't know that these instruments exist. They don't know how to deploy them, and they don't know how to design for them. So it's really, really important that we start raising awareness of these instruments and ensuring that there are policies that can support an ecosystem for SMEs and investors for these instruments to work. Supporting research to evaluate the impact and scalability of cost-effective financial instruments is also important, because we do have, again, lots of financial instruments out there, but again, we need to be able to speak to the evidence of what these instruments are bringing to us. Now, promote peer learning and experience sharing. This is something that we've done a lot in a number of places. There's been significant learning between India and Africa, especially around financial instruments and how to improve financial involvement of farmers and how to get businesses to work with farmers. This is an opportunity also to, here we call on this being an instrument that needs to continue being used. Next slide. Building institutional capacity and technical capacity. This is really, really critical to ensure that different ministries, related agencies and ministries have the ability to plan and ensure that improved coordination and alignment enough to attract resources, enough to design programs that can help them attract resources. Provide targeted training for development banks and investment authorities on innovative financial tools. This is critical, even before innovative financial tools. Just being able to ensure that the financing of the agricultural sector, which is extremely, which is not really a given for someone who is funding, if my core business is funding infrastructure, say, for example, it's not a guarantee, it's not a given that I'll be able to finance the agricultural sector. In fact, there's a really good example here in Rwanda where the Ministry of Agriculture actually decided to finance banks to ensure that they have an agricultural desk and made sure that they trained they ensured that the person who was manning the agricultural desk was trained in agriculture and how agriculture works. Not everybody knows that agriculture works on seasons. Not everybody knows when those seasons start. Not everybody understands where markets come and markets go. So I think this part of ensuring that there's a very clear understanding of the knowledge of the agricultural sector in our banking institutions and financial institutions, and how the sector works and what makes it work, and where challenges and opportunities arise within the sector is extremely important. Establish dedicated units within ministries to support investment pipelines is extremely important, because people look at the sector, they understand that the sector does have opportunities, but they struggle to understand how to connect with the sector. They move around a lot in the sector trying to find information. They move around in the sector trying to understand who to talk to get things moving. So an investment desk that helps ensure that investment pipelines are being developed. But there's also a one-stop place where you can ask for information and be able to get everything you need in one place. Many countries are already beginning to do that, but it would work very well for the agricultural sector here. Then enhancing, excuse me, just 1 second. Enhance institutional capacity to mobilize and manage large-scale transformative agri-food investments. This is also something that if we have that capacity, it makes it much easier for people that are coming to engage with the sector to find a place to go and a docking space in the ministry. Next slide. Bridging the gap in banking access. I think we've made a lot of progress in this area. Part of it was because COVID forced us to stop using paper and forced us to start thinking about online banking and other things like that. So in a country like, in some of the countries around here, you would see that this has moved a lot. Some of the challenges that we've had have actually created opportunities in terms of improving SMS connectivity, improving digital infrastructure, and ensuring that a lot of banking is happening on the now available telephone ecosystem that is available at household level. So this is working very well, and we need to do more of that to ensure that areas that have low connectivity are improving and being connected as well. We also need to support regional platforms to ease transactions for entrepreneurs and exclude transaction for entrepreneurs excluded from formal banking. Those type of platforms will help with exchange rate issues. They'll help with transactions for businesses. They'll help with cross-border movement of food, which is extremely important in our regions. We also need to invest in training and awareness to boost adoption of some of the financial technologies and innovations that are coming on board. Next slide. I think this point was also called out by Professor Joachim in his remarks when he said aligning agri-food system financing with integrated rural development. There was a really good case made during the Food System Summit around the true cost of food, where when we don't align financing to all the other things that are happening in our systems in the health sector and in many other areas, we end up paying for the cost in other places. We end up paying for the costs as a result of poor nutrition. We end up paying for the cost as a result of underinvested education and all sorts of things. So here, ensuring that national agricultural investment plans are aligned to national priorities overall is something that is extremely important. We've made a lot of progress. Institutions like Agro have significantly invested in improving how national agricultural investment plans are designed. And helping countries do this, ensuring that they are well costed, ensuring that they are built on evidence, but also ensuring that there's a mechanism to take them forward, especially now through the the now legacy program at the Africa Food Systems Forum that allows countries to bring forward clearly and well-designed investment plans forward. So I would countries that are looking for that type of support can reach out to institutions again like Agro to get that type of support. Coordinate funding sources with the national investment plans to boost efficiency and attract development financing. I really think that part of what we need to improve in how we develop our national investment plans also is to look at the efficiencies that we can gain within sectors, within institutions, but also across sectors. When we plan together, again, there's an opportunity to reduce fragmentation. This is one of the food system sector is one of the sectors that has huge fragmented investments all over the place. And again, the more we coordinate around common areas, the more we show improved efficiencies, the more we show improved effectiveness of investments on the ground, the better it is likely that these sectors will attract more financing from interested institutions. Lastly, it's like I said at the beginning, it's really important that we link what is happening in the agri-food financing to what is happening in the health sector, to what's happening in education and infrastructure. It's very difficult to advance the food system sector if we are not advancing infrastructure and energy for obvious reasons. If we want to ensure that farmers have access to markets, if we want to make sure that food is being added value to, but also now, like I said earlier, ensuring that we are linking it to other outcomes, development outcomes that are important to where we are going, like health and education. Things, if invested at this stage, save us a lot of burden when we go forward in ensuring that we are not paying for malnutrition, ensuring that we are not paying for undereducated kids and things like that, and ensuring that part of what we are doing is also addressing the challenge of how children in schools access food. So again, really aligning agri-food financing investments, and we've called for this especially when we talk about improving school feeding and making sure that school feeding is linked to better outcomes in education and better outcomes in nutrition, while at the same time advancing what's happening in the agricultural sector. So hopefully, with this action agenda, these recommendations coming from the report, and the opportunity for people that are listening to have access to this report and policymakers to have access to this report, hopefully we can start looking at opportunities that can allow us to improve the the financing investment environment, even as things get complicated as we go forward. So thank you again for the opportunity to discuss this, and hopefully this report becomes available to you all and becomes widely used. Thank you to the people that put it together. Over to you, Laiha.
Thank you so much, Dr. Kalibata, Dr. Nakito, Mr. Sunga, for presenting the findings from this latest report by the Malabo Montpellier panel. As Dr. Kalibata said, we are making all the resources available to you, and just a heads up, all the participants will be getting all the resources, the report, the case studies, as well as the presentation that you just saw. So we will be sharing the link in the chat in a couple of minutes, so you can head to the Malabo Montpellier panel website resources page and access the full report as well as the case studies. Thank you all for those engaging insights. We are now moving on to part 2, and we will kick off this segment with reflections on the outcome of the report. It is my honor and pleasure to welcome our Malabo Montpellier Forum co-chair, Dr. Asia Ben Salah Alawi, Ambassador at Large to the King of Morocco. Ma'am, over to you.
Thank you very much, Lai. Excellencies Co-Chair, Dr. Haile Mariam Desalegn, thank you for your efficiency, and Dr. Ibrahim Mayaki, welcome as Co-Chair. Professor Van Braun, Dr. Badian, members of the Malabo Montpellier panel, honorable ministers and senior representatives of African countries present here today, representatives of the African Union and of development partners organizations, ladies and gentlemen, all protocols observed. It is both an honor and a privilege to address you today at this high-level forum as we reflect on a critical report by the Malabo Montpellier panel, which lays bare, as you have heard, both the challenges and the immense opportunities in financing the transformation of Africa's agri-food systems. Across our continent, agri-food systems form the backbone of livelihoods, employment, and food security, yet, as this report rightly highlights, financing remains one of the most persistent bottlenecks to unlocking their full potential. As mentioned by Mr. Ismail Songa, the numbers are sobering, but they also present a call for action. I commend the Malabo Montpellier panel, not only for the clarity of their analysis, but also for the hope they present through examples as presented by Dr. Aisha Nakitu, the case studies from Rwanda, Malawi, and Morocco are powerful reminders that transformation is not just possible, it is already underway. Malawi coordinates policy via Malawi 2063 and NAIPIS, program like Transform, blend climate-smart agriculture, nutrition, and the market access. The National Agriculture Investment Plan is indeed a cornerstone for aligning public, private, and donor financing. It exemplifies what can be achieved when planning, budgeting, and monitoring systems are coordinated across ministries, agencies, and development partners. Through deliberate policy reforms and institutional collaboration, Malawi is creating the conditions for more predictable, impactful investment flows into its agri-food system. Institutions, MAIC, NIF, National Bank, offer equity loans and guarantees targeting SMEs, women, and youth. Complementing these efforts, the country's skill development program has shown that investing in science, education, and vocational training can significantly accelerate agri-food system transformation. Morocco Green Plan and Green Generation Strategy drove modernization. Agencies like Crédit Agricole du Maroc provide subsidies, credit, and insurance. The National Strategy for Financial Inclusion has developed data-driven credit scoring, drawing on until payments, utility payments, mobile transactions, and behavior data to evaluate borrowers' credit worthiness. This innovative approach has broadened access to finance for smallholder farmers and agri-food SMEs. PPPs and blended finance, for example, with OCP Group, which is very active across Africa, as you know, boosted high-value exports and agro-processing. At the same time, Morocco is boldly integrating financial instruments to strengthen climate resilience across its agri-food systems. The expansion of agricultural insurance, including public-private hybrid models like the multi-peril crop insurance program, is helping mitigate risks from farmers, particularly in the face of increasing climate volatility. This is a model that many can learn from, while also reflecting on how to make such systems more accessible to smallholders and women. And in Rwanda, policy reforms under Vision 2050 expanded financial inclusion, financial sector strategic plans, and climate finance strategies mobilized investments in skills, infrastructure, and green instruments. we see how targeted public investment is enabling smallholder farmers to access credit and extension services with greater ease and transparency. Institutions such as the Development Bank of Rwanda and the Business Development Fund offer concessional loans and credit guarantees to promote agricultural investments. These instruments help reduce lending risks and encourage greater participation and financing from the private sector. These examples illustrate that while the context may differ, the principles are shared: political commitment, smart public investment, and innovative financial instruments tailored for local realities. However, we must acknowledge the path ahead is not without challenges. Allow me to underline just some key ones. Agri-food financing remains insufficient, as everybody knows, despite rising public spending. Too often, it is fragmented, short-term, and misaligned with the long-term vision we collectively aspire to. Smallholders, who feed the majority of our people, women and youth, who, despite their central role, are often left behind in financial decision-making and investment targeting and face credit exclusion. Climate change, input costs, and volatility markets exacerbate risks. The Kampala Declaration rightly calls for $100 billion in public and private investment for agri-food systems, including a minimum of 10% of national public expenditure annually for agri-food systems transformation. Yet, today, the majority of African nations remain below the threshold. So, what must we do? The report calls for action and provides strong recommendation. First, we must strengthen national coordination mechanisms between agriculture, finance, and planning ministries to ensure agri-food investment are embedded within national development agencies and budgets. Second, we must mobilize more domestic resources through financial reforms, incentives, and strategic public investments that can crowd in private finance. The public sector must lead, but not alone. Third, scale specialized financial institutions, as do, for instance, the examples from Morocco's Crédit Agricole, Rwanda's Development Bank, and Malawi's National Bank. Fourth, PPP models are critical for de-risking instruments, guarantees, blended finance, for instance, and attracting private capital. Fifth, we must rethink our financial ecosystems, although I do appreciate the approach of the report, which is really focused on ecosystems, to be more inclusive, responsive, and digitally enabled, especially for youth and women-led agribusiness that hold the key to innovation and job creation. Six, boost research, skills funding, as do, for instance, revamping training centers in Malawi and sector-specific programs in Morocco's Haliotis plan for fisheries. Affirmative policies backed by strong political will and decisive leadership are essential to building more inclusive agri-food systems and removing barriers that hinder equal participation. We have heard a lot already, but probably just as a reminder, we could keep as a key takeaway the following: sustainable agri-food transformation requires coordinated policies, innovative finance, inclusive institutions, and climate-resilient investments, with governments leading the transition as catalysts, convening stakeholders, de-risking investments, and scaling successful models across Africa. I commend the Malabo Montpellier panel and the research team for producing yet another timely and impactful policy report. I wish you all productive and engaging discussions throughout the day. I look forward to the insights from our experts during the thematic fireside chats, as well as the opportunity to learn from the experiences and successes of other countries in the region during the roundtable session with senior representatives. Thank you.
Thank you so much, Your Excellency, Dr. Alawi, for those remarks. And we look forward to hearing from you again toward the end of the session. We are now getting ready to get into some thematic discussions, but before that, we would like to present a closer look at the Malabo Montpellier panel's action agenda on your screen.
Money talks. Agri-food systems are central to Africa's economies, livelihoods, and food security. Yet, current financing remains below the level needed to drive their meaningful transformation. Amid climate shocks, growing fiscal pressures, and a shifting global aid landscape, proper financing and investment would be critical to achieving sustainable and inclusive transformation of agri-food systems. Here's what we know. Employment in agri-food systems accounts for approximately 65% of total employment in Africa. Government spending on agriculture on the continent has increased in absolute terms in recent years. However, the share of total government expenditure on the sector has steadily declined. Financing is critical to achieving several interconnected objectives, including sustainable land use, food security, healthier diets, and improved livelihoods. To steer agri-food transformation, African heads of state and government approved the Kampala-Kadip Declaration in January 2025, with a commitment to mobilize $100 billion in public and private sector investment by 2035. The 16th report by the Malabo Montpellier panel examines the needs and barriers to financing Africa's agri-food systems and the strategic financial interventions being implemented to leverage opportunities for transforming these systems. MONEYWISE, Policy Innovation to Finance Africa's Agri-Food Systems, presents evidence on successful approaches, institutional and policy innovations, as well as programmatic interventions implemented by African countries to strengthen financing and investments toward agri-food system transformation. The report also provides case studies for Malawi, Morocco, and Rwanda, countries that have had the most success and made the most significant progress in providing increased financing for sustainable and inclusive growth of their agri-food systems. The Malabo Montpellier panel proposes an action agenda for African governments to strengthen domestic financial ecosystems for agri-food systems. Unlock domestic finance through incentives, de-risking, and partnerships. De-risking mechanisms such as credit guarantees can be used in agri-food finance systems to reduce investment risk for financial institutions and encourage greater private sector participation. Land tenure reforms, smart subsidies, and strengthened farmer cooperatives can help improve the bankability of smallholder farmers, increase awareness and knowledge of innovative funding mechanisms. Raising awareness of new financial products among key stakeholders is crucial for creating an enabling environment for effective funding mechanisms. Support for research to rigorously evaluate such funding mechanisms will build a strong evidence base on their impact, scalability, and cost-effectiveness, build institutional and technical capacity. Agricultural ministries and related government agencies continue to face constraints in planning, budgeting, and monitoring, which limit their ability to mobilize and manage large-scale investments. Targeted training for institutions involved with public finance will strengthen their ability to design and manage new types of finance instruments. Bridge the gap in formal banking access. Mobile-based solutions such as SMS or USSD crowdfunding platforms can be promoted in areas with limited internet access while strengthening the digital infrastructure, enhancing the interoperability of mobile payment systems, and supporting regional payment platforms can improve financial access for entrepreneurs who are excluded from formal banking. Aligning agri-food financing with integrated rural development. Aligning public and external resources with national agricultural investment plans will enhance efficiency and help attract broader development partner support even amid declining donor flows. As Africa prepares for the implementation of the Kampala-Kadip agenda on building resilient and sustainable agri-food systems, scaling up and adopting proven innovations in financing at national levels will be crucial. With this report, the Malabo Montpellier panel proposes a comprehensive policy playbook to guide strategic government actions that can play a transformative role in strengthening agri-food system financing across Africa. MONEYWISE, a must-read for policy actors.
The links are available in the chat. If you haven't already, please head to the website and download your copy. With that, we will now move on to the thematic fireside chat, and it is my pleasure to welcome the chair and moderator of the session, Professor Muhammadu Ka, who is a member of the Malabo Montpellier panel and permanent representative of the Gambia to the UN in Geneva. Welcome, sir.
A very good morning, and thank you very much. I wish to stand on existing protocols and appreciate the welcoming remarks by our co-chairs and the very thoughtful opening statements that we've just heard. I also wish to appreciate the insights that are shared from the launch of the Malabo Montpellier panel and the very thoughtful and insightful reflection on the outcomes of the report. These set the stage for our thematic fireside chat today. We have 5 thematic areas that we will be diving deeper, and we have very thoughtful leadership that will be leading us into sharing their insights on these themes. And we will start with our sister, Sarah Mbago Bonu, who is the director of the International Fund for Agricultural Development, IFAD. She is a director of East and Southern Africa at IFAD. Ma'am, you're welcome to this very important report, and we look forward to your insights. And I have some few questions to engage you, drawing from the backdrop that we've been shared with this morning. Once again, welcome. And the first question we have for you is, how can IFAD better support African governments to design and scale bankable, climate-smart agri-food programs that reach the last mile, especially women, youth, and SMEs? We have 45 minutes for this, for 5 segments, and I have 4 questions for you. So if you can be very brief and to the point, we will appreciate that on these questions. You have the floor for the first question.
Thank you very much, Ambassador Mamadou, and thank you for the organizers and the members and the panelists of Montpellier for inviting my contribution and session. And of course, International Fund for Agricultural Development's mandate is to finance food systems transformation. And we have heard here today about all the distinguished speakers and the excellencies and co-chairs of Montpellier, how financing still, still is short and falls far from what we need to do. And so as IFAD, we actually give a number of options for countries. But just to say, because we want to be extremely brief, I would like to use this opportunity to just describe, for example, what we're doing in Uganda. I happen to be here with the Small and Medium Agribusiness Development Fund. It's these types of special purpose vehicles where we have EU financing of 10 million We have the George Soros Foundation that also provided 5 million. We have the National Pension Fund. National pension funds across Africa sit on a lot of resources of Uganda, providing $2 million to this fund. And then we also have Finnish Church Aid providing a further 10 million. Basically, this fund was established in 2017, and the Yield Fund is a fund with a life of 10 years. Basically, it has been able over the years to finance 15 small and medium enterprises, and the 15 agribusinesses have managed to receive and have benefited from roughly 3 million business development services, technical assistance, and the investee companies have collectively over the years provided a market for 60,000 smallholder farmers in Uganda and created jobs for 10,891 persons, including youth and women. And this is just to say that these enterprises have actually yielded about 16.5 million euros collectively. So it's these types of businesses that we want to stimulate. And if I just say that, for instance, one of them, Pristine Food, is now the premier producer of egg powder in East Africa, and the only enterprise that is doing that, and working effectively on nutrition as a result, and partnering with many people to scale up the consumption and access to protein. We have CamFed, which is an input provider that has now 120 distribution points across Uganda. And this enterprise has created jobs for distribution sites, but is actually providing much needed agricultural inputs to intensify livestock keeping. These are catalytic and important transformational investments in each of these businesses. And the fund is now registered on the Stock Exchange of Uganda, deepening finance and creating a sustainable ecosystem in Uganda. And finally, there is now standards for business development, delivery and support to medium and small enterprises in Uganda. As a result of this program, the policy has just been approved by Parliament. And I would like to stop there with this very specific example of how we design differently in the context of some of our countries.
Thank you so much for that insight. Now, given IFAD's regional reach, how do you assess the readiness of African governments to integrate inclusive, climate-resilient investment strategies into national plans and attract long-term finance?
No, thank you very much. We actually put in a mainstreaming lens in all the financing that we do. So in the case of climate, we know that the NDCs have specific climate allocations, and we know that many governments struggle to actually mobilize this important co-financing. So what we do is we actually design together with those climate funds in practice. I'm happy to say that we've just mobilized a total of 300 million from the Green Climate Fund for the dairy value chains for Tanzania, Uganda, Kenya, and Rwanda. And this was possible because each of those programs and each of those countries had very specific ambitions under the chapeau of the East African community to develop the livestock and dairy sector, specifically milk products for export in the region, but also in global markets. And by designing specifically for climate, trying to look at unlocking new businesses for young people, on looking at the circular economy, redeploying manure, looking at new fodder technologies, crowding in the financing from the global, the Green Climate Fund side of things, and co-financing individual country programs, we've been able to develop a program of about 500 million in the region. And so this is important to do. And the co-financing that we are able to design with is very key, because that's where you then get scale. With this operation, we're able to reach 2 million beneficiaries individually, but definitely we will be touching many more households in the region. So the co-financing element is important, and the climate grants are very key in actually making the loans that we provide more concessional.
Thank you, Sarah. And IFAD has deep roots in rural transformation. What have been the most transformative financing model IFAD has supported for our rural women and our youth in agriculture? And how can these be replicated across our continent?
I was connected and I heard Dr. Kalibata and Her Excellency Asia also looking and highlighting some very specific models. I would like to look at the case of BIDCO, where we have actually worked with fairly large enterprise in supporting the transformation of Kalangala Islands in Uganda. And the impact of this national oil palm project has been phenomenal. The project finance included 75.8 million as a loan and 6.25 million as a grant. But in here, we really worked at making sure that smallholder farmers were able to access much needed seedling, much needed training, and it came with a market already built in. So BIDCO was purchasing and buying the produce automatically. So those types of contract-based farming, those types of public-private partnerships are the ones that we want to bring to scale. And wherever you find that, you find whole communities, all areas transformed. Now there's roads, there's electricity, there's water. The housing has changed from mud huts to permanent housing on that island because of the co-investment. The ripple and return effects of working in that way has been very beneficial. And working through local banks, allowing farmers to access much needed resources through those facilities, underwriting them, guaranteeing that, giving them access to inputs has really made a difference. And so I would really encourage all those who are connected here to really look at how you can not only look at value chains, but wider livelihood returns and really work with the private sector when you want to invest. So in this case, the geography was known, the private sector off-taker was known, and then the communities were ready to adopt and do things differently. And I think the platform and the subsequent cooperatives that have come in and the fund that represents the community there make a difference. And sometimes those models take longer to design. They require more dialogue. They require more extremely important. Thank you, and back to you, Ambassador.
Yeah, thank you, Sarah, for that. And the last question I have for you on this theme is, given global fiscal pressures, how can African countries better position themselves to access and leverage concessional finance for systemic transformation of our food systems?
I think sometimes we only look at traditional sources, Ambassador, and this has been part of the myopia that we have. Remittances are triple in volume, even quadruple the volume that traditional aid and donor flows have been. And IFAD has been pioneering the use of remittances in unlocking domestic finances. And remittances have traditionally been concessional. Now, whether it's through remittances bonds that we can unlock this finance, or whether it is actually co-financing and developing special purpose vehicles for remittances for development purposes. These are ways in which we can unlock new forms of financing. I also believe that when we look at the domestic resources, there is a lot that could be said for looking at food bonds, nutrition bonds, green and blue bonds, but in national currency. Definitely that is something to look at, because of course, when you look at foreign currency and you earn in local currency, there are some issues there in terms of sustainability. But unlocking these large volumes of resources and actually targeting either investing in nature for future productivity and production capacities in the country, or if you are using those to target protection of water sources, or if you're actually using them to de-risk and crowd in small micro investors in the country that you're looking at from an African private sector perspective. All of these are feasible as means and ways of unlocking innovative financing going forward. One example I would like to say is working with the private sector, such as Equity Bank, where we have been able to work with the bank who is borrowing on concessional, super concessional climate terms, but scaling that up across its footprint in the region and introducing products for adaptation, where smallholder farmers can really access loans for adaptation. It's very novel, it's quite new, and actually Equity Bank is investing an equal amount of resource as the resources it is mobilizing from its partners. And I think tapping into innovative ways, these already established sustainable private sector arrangements could really make the difference, rather than creating parallel structures that have to be dependent on donor financing, and actually working with what is already in the system and boosting that up is what I would say makes a lot of sense. Thank you, and back to you, Ambassador.
Thank you, Sarah Mbago Bono, Director at IFAD East and Southern African Division.
Thank you.
We appreciate your insights on sharing perspectives from IFAD on agri-food systems finance. Thank you so much. I will go to our second theme, which is de-risking agri-food systems investment, barriers and opportunities. And we are joined by Dr. Ilyas Galande, a former governor of the Reserve Bank of Malawi. Sir, you're welcome to this fire chat. The first question I have for you is, across Africa, rural and smallholder farmers face persistent exclusion from finance. Which regulatory innovations, whether in Malawi or other African countries, have successfully expanded access to credit or digital financial services for this segment? You have the floor, sir.
Thank you very much, Ambassador, for that question. And again, let me also ride on the protocols that have already been observed. I'm sorry I had some technical challenges, so I joined a bit late, but I've picked up most of what has been exchanged so far. I wish I could be very positive about the successes that have been registered. Apparently, in terms of financial inclusion, particularly for smallholder farmers, we haven't done very well because I think it's been, they have been treated as a very high-risk group, and for various reasons. One of the major issues that I think countries are still grappling with, and I think including Malawi, is the issue of land tenure. Because for most of the financing institutions, they would want to be sure that they are funding something that really belongs to the smallholder farm. And in the case of Malawi, of course, land is not really strictly owned in the true sense that you could prove and you could have actually title to land for you to access financing for your operations. So it's a challenge that most of our countries are having to deal with. Of course, progress is being made. There are instances where land is now being acquired and you can lease it. In Malawi, we've been having debates over the tenure of that lease, whether it should be 50 years or whether it should be more than that. We used to have 99-year lease agreements. They seem to have been reduced to about 50. And that most people have argued that it actually limits the extent to which someone can make investments into the land. But it's not all gloomy because, as I said, the regulatory environment is actually changing and improving, and now land is being regarded as an asset that once owned can be used to secure financing from financial institutions. Over to you, Ambassador.
Thank you. Thank you, Dr. Galande. Many commercial banks remain cautious about agriculture lending due to perceived risks. How can financial regulators and ministers of finance in Africa design de-risking mechanisms that support agri-food lending without distorting credit markets?
That's a very good question. I believe what needs to be done is to create probably a trust fund or some other type of fund that specifically caters for de-risking farming operations across a broad range of different farmers. And that could be done by simply having a deposit insurance scheme, for instance, or a credit insurance scheme, whatever it would be called, so that once credit has been extended to someone, to some smallholder farmer, there's actually another institution that stands behind that smallholder farmer, so that should they experience any challenges in repayment, that scheme is going to come in and try to sort out the situation. So, of course, in most of our countries, the challenge is financial literacy is quite low. So even when these facilities are created and you are offering them, the depth with which they are understood is quite limited. So we need to start from actually improving on financial literacy for people to understand that, in fact, you could have these facilities and then have institutions that are simply there, created to de-risk smallholder farmers' operations. The other thing that could also be done is to group the farmers into schemes so that they are able to support each other. We've got on a small scale similar arrangements in the micro sector where lending is extended to a group, although individuals benefit separately, but the group dynamics help in the repayment, and they help also cushion each other in times of problems that may arise. So I think the regulators need to come and think outside the box and create institutions that are specifically there to de-risk smallholder farming. Otherwise, as it is, you're right, Ambassador, that traditional financial institutions are very scared of lending to smallholder farmers because, let it be admitted, they are actually a high-risk group when it comes to formal financial institutions, and they don't want to come close to lending to them. In Malawi, we did have a bank that specifically was extending credit to farmers. But of course, because of the difficulties of non-performing loans, they too converted into a traditional bank, so that now they really are not there specifically for farming operations. So we need to make sure that they are cautioned somehow by the regulators, recognizing that what they are doing is quite a noble kind of cause. Thank you, Ambassador.
Thank you, Dr. Glande, for your very valuable insight on de-risking agri-food systems investments, barriers and opportunities. Now I will ask our next panelist on the same theme to join us on some few questions I have. We have Dr. Bakel Yifru, Head of State Capability at AGRA. You're welcome, sir. Do we have Dr. Beckley on the platform?
He has recently said he is not available.
Yeah, he did say that he needed to leave earlier. Thank you.
He left.
Mm.
Okay, then I will jump on our next theme, which is governance and regulatory framework, financial inclusion and access. And I have a panelist, Mr. Eric Naivasha, Head of Sustainable Finance, KCB Bank Group, Kenya. Sir, you're welcome. Do we have Mr. Eric?
Thank you. Thank you for having me.
Yeah, Mr. Eric, welcome. On this fire chat, I want to engage you on the fact that agriculture has long been perceived a high risk by commercial banks. From KCB's experience, how is this perception evolving, especially in light of climate volatility, digital innovation, and emerging food markets?
Thank you, Ambassador, for having me, and I stand by the protocols already established. And thanks for that question. Agriculture is still high risk, especially for smallholder farmers. And that is exacerbated by the fact that now we are dealing with climate change. So that risk is actually higher than it used to be. So banks are looking at this as if it's still not an investment class. If you look at the share of credit, for example, in the Kenyan market, agriculture gets only 5%, actually less than that, of the total share of credit from the private sector, from banks. And this is a sector that is contributing to between 25 and 33% of GDP, and supporting 70% of the rural population and supporting 40% of the overall population. So there's a mismatch, there's a disconnect between the investments we are making and the value of agriculture and agriculture ecosystem. But I think it's not, to answer your question, it's not all doom. We are beginning to see these perceptions change. We are seeing better appreciation of risk by banks within the agricultural ecosystems. We are seeing innovations coming through in terms of financing models and instruments. We are seeing better ways of risk mitigation within agriculture ecosystem. We are seeing digital platforms now coming to support farmers to be able to access loan and reduce cost. Because one of the challenges that we've been facing as banks is reducing the cost of lending and delivering credit to millions of small-scale farmers in the region. But then using digital tools and digital platforms, then we are seeing that coming through. So, Professor, it's not all doom. We are seeing now banks coming on the table with a lot of innovations in that space.
Thank you, Mr. Naivasha. Kindly share any practical examples where risk-sharing mechanisms that have successfully expanded private sector lending to the agriculture and food sector in Kenya or other African countries.
Yeah, thanks for that question, Ambassador. I think, first of all, we need to appreciate what risk we are dealing with. Because when you look at the agricultural sector and agricultural value chains, we are dealing with crop failure. And again, now when you add climate change, that becomes multiplied. We are dealing with low yield. When you look at Africa, and many parts of Africa, the productivity of our land is 6 times lower than the global average. That's another risk we are dealing with. Seasonality of incomes within the agricultural space. Then there's a big issue we are dealing with on post-harvest losses. We are losing 30 to 40% of what you produce. That means we need more labor, we need more water, we need more seeds, we need more fertilizers. just to replace what we have lost. So managing that, I think the issue of collateral, land ownership, and especially women are disadvantaged because of collateral issues. The youth, how do we attract youth into the agriculture? So there are so many risks, including market risks that we are dealing with, literacy levels. So when you quantify these levels of risks, then you start thinking that you're dealing with a monster. But I think the good thing and the message is there are a lot of risk mitigation mechanisms that now banks are putting in place. And I'll just share very quickly a couple of them. I think risk sharing instruments, those ones have been shared, whether it's from donors or DFIs or sovereign funds and all that. They are helping, and we are accessing quite a bit of those. But what we have seen as one of the best de-risking mechanisms in agriculture ecosystems is two things. One is on the technical assistance. We have seen that one as a powerful de-risking instrument. Farmers who have been trained, and we have our whole curriculum that we take through farmers, including the issues of climate change. We have seen the repayment from those farmers better, up to 700 basis points than a farmer who has not gone through the training. So that's the first thing in terms of the de-risking, in addition to the instrument, risk sharing instruments. The other one is on the ecosystem approach and the value chain approach. What we have done is to create anchors along different value chains, whether it's a milk value, dairy value chain, livestock, coffee, tea, so that every small-scale farmer that we are financing as an anchor. Because the issue we are facing, Ambassador, is data. If I want to go and assess a smallholder farmer, there are no records. There's no data. So I have to get data from a cooperative society, from an aggregator or an anchor. So working with the anchors, with the aggregators or produce, whether it's a cooperative society or a value addition kind of cooperative, we are able to get data on their produce, on how much they are delivering. And then we are able to open loan limits based on their deliveries. So we are looking at data from the anchor or the aggregator, not from the farmer, because you will not get that data. And when we change that, we are now able to increase the lending that we are taking smallholder farmers based on the deliveries of their produce to a cooperative society or an anchor. And that is also what we are doing on the digital side. We are opening now digital limits on their funds based on that. So ecosystem approach. And the last one is innovation around the lending products. So that then we are looking at the seasonality. We are looking at specific value chains. So we don't have a product for agriculture. It's a product for dairy, it's a product for coffee, it's a product for tea, because they have different kind of needs. So we have to structure our innovation in financing a little bit differently. And then, of course, there's insurance. We're embedding insurance in the products and crop indexing and all that. And also capacity building of the bank itself. Because we were told earlier, I can't remember the speaker, bankers are not agronomists. So we are turning the story and employing agronomists and turning them into bankers, so that when you go to the farmer, they are able to understand, speak the same language, and be able to innovate around financing.
Thank you, Mr. Naivasa. Kenya has been a leader in digital finance through platforms such as M-Pesa and mobile banking. How is KCB leveraging fintech and mobile platforms to expand access to credit and financial services for smallholder farmers and agri-SMEs?
Yeah, thanks for that question. And it's true, there's a lot of innovation around digital financial solutions for other sectors. I think agriculture is also now coming into that. And I'll tie that my response to what I've said about ecosystem, because for you to offer a digital product that is accessed through a tablet or mobile phone, you need data that will score that particular farmer and give them a limit of what they can access digitally from their phone. So then working with the anchors, the aggregators of produce, farmers cooperatives, we are now able to open loan limits digitally. And in the last couple of years, I think the last 2-3 years, we've had 2 platforms for farmers where we are working with cooperatives, open loan limits based on their produce, convert that one into a digital product on their phones, and then they're able to access that automatically, whether they want to buy seeds and all that. Then we've gone ahead and said, we don't just want them to access money. How do we now create a platform where we link the farmer with the suppliers of inputs, with the aggregators on the same platform, so that then it completes that cycle. So yes, we've innovated that. We have 2 products. We have what we call the MobiGrow that links farmers. Can I still be heard?
Yes, we can hear you.
Okay. Something happened on my screen. I can't see anyone. So yeah, thank you. Yeah, so we have both digital solutions that we have innovated that can be accessed either through a USSD, through web, or through a mobile app that is now increasing access and enabling digital transformation for farmers.
Thank you very much, Mr. Eric Naivasa, for your very valuable insights on governance and regulatory frameworks and financial inclusion and access. We appreciate your very thoughtful remarks. Now I move to the next segment, which is on agri-SME finance landscape in Africa. And we will be joined by Mr. Teddy Rokes, Director of Entrepreneurial Solutions Partners, LLC based in Cote d'Ivoire. Sir, you're welcome.
Thank you for having us.
Yes, agri-SMEs from the main drivers of Africa's food systems, yet most struggle to access capital. What are the core systemic barriers preventing finance from flowing to agri-SMEs, and what practical reforms or innovations are needed to overcome them? And if you can be very brief, we'll appreciate it.
Yeah, well, thank you. I think I will be brief because a lot has been said before by Mr. Naivasa. I think when we look at it, we ought to look at the sort of like both the supply demand, like supply of capital, demand for capital, and then regulatory frameworks. So I think as it relates to the supply, what we're seeing is that a lot of the supply is not adequate, like tailored for the needs of the enterprise within this value chain. So we clearly need more tailored product, and we also need a mechanism to better assess and manage the risk. I mean, especially in light of like climate volatility. I mean, many things that have been mentioned. On the demand side, and this is work that we're doing. I mean, in the work that we do at ESP, providing what we call like intelligent capital, which is the right mix of value creation services and tailored financing to high potential entrepreneurs across Africa. We do quite a bit of work building. I mean, I think Mr. Naivasa before mentioned reinforcing, building the capacities of the entrepreneurs, but also of the financiers. So we also need to look at, on the demand side, at equipping SMEs to basically access capital. Because I mean, what we see, it's clear that there is a lack of capital and inadequate capital flowing into the sector. However, if we take a parallel with different sector, a lot of our banks and financial institutions are over liquid. So the demand then lies on the demand side for capital, and are the SMEs, in particular in that sector, equipped to basically access capital? And that requires like working on the foundation, building their capacity.
Yeah, thank you, Teddy. But beyond capital, agri-SMEs need technical support. What specific role should development partners, incubators, and accelerators play in strengthening agri-SME capacity to become investment ready, become scalable and resilient?
Thank you so much, Professor. I think I'm tempted to say that trend has left the station. I mean, there's a lot of like technical capacity facilities that have been provided, designed, launched, and doing like amazingly good work across the continent. I think what we're seeing, if I could complement all the good work that's being done, I would say like two things. I mean, first of all, relying on data. By relying on data is like making sure that we understand in the way the technical assistance, actually at ESP, we don't call it technical assistance, we call it value creation. We're here to create value. It's a semantic nuance, but it has its importance. We work with private sector entities, and I mean everywhere else around the world, when you intervene to support an operator, an enterprise, a firm, you create value. When it comes to Africa, we provide technical assistance. So to us, technical assistance is part of the value creation, but we want to make sure that each intervention is geared towards creating values for the entrepreneurs. To do this, we need to make sure that we understand what are the specific needs of the entrepreneurs that we serve across the value chain. And this assessment ought to be like data-driven. Again, there's a lot of like assumptions, there's a lot of research. I mean, a lot of like incubators, accelerators feel that they already know. We believe that it's important to build data-driven solutions. So number one is anchoring the intervention in a very clear assessment of what the enterprise need. And the second is working together. So working together, I mean, when we look at the technical assistance, there are new issues that are emerging, like climate, integrating like technology. So when we look at the value creation service for ag enterprise, I would say there are probably like three aspects that ought to be covered, and all of this should be like anchored into data. Number one is basically building the foundation of these enterprises as businesses, like making sure that they have the accounting, I mean, the house in order would call it. The second is the technical aspect to basically operating in the ag value chain, across the value chain. So this is where at ESP, we partner with institutions like C4 Aircraft and research institutes that should be collaborating more with institutions, with incubators and accelerators. So there's a lot of research. One thing that I'd like to say is that we feel that there is a lot of very good research across the continent and beyond that is not applied. So how do we make sure that this research hits the ground and these research institutes join force with accelerators and incubators to provide a sort of like value proposition that makes sense to the entrepreneurs that we serve? Yeah, so the first thing is like data driven. The second is like making sure that there is like more collaboration. And that collaboration, I would insist on having research institute collaborating with accelerators and incubators and vice versa. Because I've been amazed, again, walking into that space over the past couple of years to see how much work there is in research institutes across that is not being sort of capitalized over by firms across the value chain.
Thank you. Thank you, Teddy, for a very valuable insight. And now we move to the last segment, which is on a very important theme, which is women and youth access to finance. And we have Dr. Uluwafi Ismahen, Executive Managing Director of CGIAR. Ma'am, you're welcome.
Hi, nice. Thank you for the invitation.
It's good to have you here. Now, as a successful woman that has mentored and inspired many youth, what specific financing barriers do women and youth face in launching and scaling agribusiness? And what guidance can you offer young African women in agri-food systems seeking to navigate and overcome financial challenges based on your very own journey. The floor is
Thank
yours.
you very much, Ambassador Mohammed, and I'm happy I came. I think many of the ideas were already mentioned and addressed. The reality when we look at women and youth, particularly we have data mostly on women so far more than youth. We know that 60 to 80% of the production per se in developing countries or least income countries comes from women. We know that half of the global production worldwide come from women again, but they are still excluded from the formal financial system. And I think many of the colleagues have mentioned it. It's a lot of barriers that are related to collateral and complex paperwork, complex system, lack of knowledge or lack of support to get their application through. So one issue that was mentioned is that we don't have enough data. We have a bit on women, as I said, because that's a subject that was in discussion for a long time. On youth, we still do not have enough. And as far as you don't have disaggregated data, you can't really improve the system. So one idea that I want to really put forward that was mentioned by Joaquim at the beginning, it's really the need to align agri-food financing with integrated rural development. So agriculture, it's not separate from education. It's not separate from infrastructure. Even in helping women and youth, it's not separated from the rural development per se. And I think really that's a key area that I hope really policymakers in this Malabo event will take back home. The second one, it's on the financing, the climate financing. Climate financing, it's not serving the small-scale farmers right now, particularly in Africa. So unless we pay specific attention to how do we bring that finance, that climate finance to address the issues of agri-food systems, it's very important. There is a number, it might have changed in the last few years, but agriculture is still part and parcel of the emission, the problem, which is 32% of greenhouse gas, but it's receiving only 4% of the climate finance. And it could be a solution. That's the other area that really we are not paying attention to, is that we could sequester much more in terms of carbon. We could reduce the methane, and there is a lot of methodologies that are proven, as a matter of fact. And I'm very happy that Teddy mentioned T4 ICRAF, which is part and parcel of the CGR, where there is a lot of knowledge that could be scaled up. Finally, just to address what would I say to the young people is that don't go alone. You need to create your circle of support. Is it a cooperative? Is it a club? Whatever methodologies you have, and really engage with your local partners. Because by the end, the bank that's going to give you financing, it's not an international bank, it's your local bank. So localize your mentality and make sure that you go as a group, because that will give you much more leverage. Go and engage. There is no bad idea. And many of the finance institutions now, luckily, have targets in terms of how many women they will support, or youth, or even climate-based solutions, and so on and so forth. So for me, the message is go fight for it, go as a group, and speak up, be part of the political sphere, be part of the voices that speak up through different channels to state your need and state your priority as well, priorities. Over to you, Ambassador.
Dr. Ismail. From your perspective, what does genuine financial inclusion look like for women and youth in Africa's agri-food system? And what structural gaps or biases still needs to be addressed to achieve it?
I think, again, it has been mentioned by many in the discussion today. If I want to put it in a lame language, an inclusive financial system, it's a system that will solve issues, that will solve issues for those small-scale women producers and young people that want to make a life in agriculture. So it's really a bundle of issues that we need to look at. And it has to make it easy as well. I think many of the solutions that we are providing are sometimes very complex. And in many ways, digitalization worked very well only when it simplified the solution. So yes, there is still a need for technical capacity, and I like very much that the banking colleague mentioned that also technical capacity to the banking system per se, to understand that agriculture, it's a different sector. It's not an energy where you put energy and then you put the switch and then the electricity come. It's a much more complex system. I think the inclusive financial system should be simple, should be easy for women and youth to use, should address their needs. So if you look at agriculture needs input at different timing. It is seasonal. Second, Agnes mentioned it. For us in the agriculture sector, it seems like it's a given. We all know it, but maybe we need to clarify those more. So, and again, I go back to data. If we want to solve an issue, we need really to bring the data to say why we are not addressing the issues of those women in those rural areas or those sectors, and how could we redesign the financial tools to make sure that they address their needs. And that's where co-creation comes, and it's very key. So doing research to understand, co-create together, and provide those solutions with the capacity building, with the support, be it technical or financial or policy, because the policy side could be a huge roadblock as well.
Dr. Ismahan, many financial products targeting women and youth remain small scale and short term. How can financial institutions move beyond microcredit to offer scalable, flexible, and tailored instruments for youth and women-led agribusinesses? Briefly.
It's briefly. So first, I think we need really to tackle the broader structural barriers, and they were mentioned. So there's a lot of legal frameworks that are very different and that are very difficult to navigate. There is a lot of persistent gender inequalities that are part and parcel of the legal framework or the regulatory framework, and those are a must. The second one, we need to really the financial system to be reformed to work for women and youth. Going back to what I said, understanding their needs and provide it. And finally, all of this should come in a bundle. So the solution, it's not only financial, it's technical, it's know-how, it's market access, it's all of it together. So I think really only if we look at it in a holistic way, using the right data, engaging the right people, co-creating with those women and youth, we can't really scale it up as needed.
And lastly, what policy reforms, incentives, or ecosystem enablers would make it easier for our young entrepreneurs, especially those outside urban areas or urban hubs, to access early stage capital, business services, and market linkages?
It's along the same lines, I would say, Ambassador Mohammed. It's really provided them with a voice, co-creating with them, bringing the data, and making those policy change. Right now, youth and women are not organized. They don't have the capacity to lobby for themselves. So, and the only channel they have is political engagement, which hasn't been very successful in most of the countries that we saw as examples as well. So I think really bringing their voice and bringing understanding their issues, and that's where research institution comes to play, like Academia 2063, like IFPRI and local institution and regional institution, to understand and put the right policies in place. What I want to end up with is that this is crucial. It's in many ways, when we talk about women, it's like we are talking about a wing out of two wings in a bird. A bird cannot fly with one wing. It needs two wings. When you look about youth, exactly the same way you could say youth and senior citizen, it's the two wing. So you need to engage them, and you need to make sure that you solve their solutions. Otherwise, we're going to continue in the trend that we have right now, which is really most of the youth quitting completely the agriculture sector and not wanting to be connected with it. So I think it's a big question for all of us across the globe, not only in Africa, that we need to bring youth back to agriculture, and particularly young women. And we need structural and fundamental changes in the way we are engaging them. And particularly, we need to really emphasize that climate solutions are agri-food solutions.
Dr. Eluwafe Ismail, we thank you for a very insightful contribution. This ends the segment of our fire chat, and I thank all our panelists for their very valuable and thoughtful insights that will be reflected upon by all of us. We thank you so much. I hand over back.
Lai, do you want to guide Prof for the next session?
Are we taking a break for the next session, or are we jumping?
No, we're jumping into it now. You can move and invite the countries.
Discussion with the country representatives.
Like, you can remind the list of countries that are present.
Yes. So we are moving on to the roundtable session with senior country representatives. On the list, we have Malawi, Somalia, Morocco, and Rwanda, who are already here.
Okay, thank you. Thank you so much. So you have Malawi, Rwanda, is Ghana around, Uganda, Somalia, and Morocco. Are they all on the platform?
5 are on, except Ghana.
Okay, so I will ask the distinguished representative from Malawi to join us on this roundtable of senior country representatives.
Professor.
Good afternoon, or good evening, or good morning, and welcome to this segment of senior officials from our member countries. May I invite you to, are you on, can you hear me, Malawi?
Yes, I can hear you.
Yeah, if you can briefly introduce yourself as you take the question. May I invite you to kindly provide us with a highlight of the current ongoing actions being undertaken by your government to enhance the flow of finance to transform the food systems in Malawi?
In Malawi,
if you can please just tell us your name and designation, please.
Okay. I am Boyd Hamela. My name is Boyd Hamela, and I'm Deputy Director responsible for planning planning in the Ministry of Agriculture. And I also happen to be heading the Agriculture Trade and Market Development. But I'm sitting in for the Principal Secretary, who is tied up with the Minister who was supposed to be here. To talk about what the government of Malawi is doing to unlock the financing to the agriculture sector, there are 3 key movements or 3 key initiatives. The first one is the parliamentary allocation. Of late, there are allocations to agriculture sector in certain emerging development areas, like financing the mega farming program, which is a program that is supporting big farmers. They are also financing to specific financing to smallholder farmers that that seem to be deprived of financing. So that is the one. We do also have joint programming sessions with all critical stakeholders, be it the development partners, private sector, even the civil society organizations, where we plan and prioritize on the many competing issues that we have in the agricultural arena. Other than that is now the mainstreaming of agriculture financing in all our activities. We have been pushing to be to ensure that the sector is financed within the CADIP requirements of having 10%, though the movement in the growth that is required has not been that okay in the sector, but we have been trying to push that consolidated or aggregated the financing to the agriculture sector should be around 10% or above of the national budget. So these are some of the efforts to unlock financing to the agriculture sector. Thank you.
Thank you. Now, given the increasing exposure of farmers to climate shocks, what do you see as opportunities to increase finance in key sectors, such as to enhance the resilience of smallholders in climate change or to climate change?
Yeah, there are several things that are really very helpful or that really matter in ensuring that the smallholder farmers or farmers in general are protected or they mitigate the climate risks that we have. One of which is the programming. In many of our programs, we have tried to ensure that there is an element, or we have tried to introduce the element of climate insurance. So we have had at national level, we have been having programs with the ARC, Africa Risk Capacity, where they provide the insurance at that national level. But we have also had the programs with the micro agriculture insurance that we have had. Other than that, on the climate resilience, we have had the programs that have been very pertinent. The first presenter that was presenting about the strides that we have made in Malawi has mentioned about the programs like National Economic Empowerment Fund, the Malawi Food Systems Resilience Program, and the many other programs, Sustainable Agriculture and Productivity Program. We have in all our programs, we do have resilient programs or resilient interventions that are channeled to farmers that are meant to mitigate the climate problems that may come. Other than that, we also have homegrown programs. These other programs are like donor financed, but we do have homegrown programs like the Malawi Malawi Agriculture and Investment Industrialization Program, which is supposed to be providing financial assistance and also providing mitigation financing to the farmers. So we do have these on top of the agriculture insurance that I've made mention, both at macro and the micro levels. Thank you so much.
Thank you, Mr. Hamila. In your view, what is the largest missing link to ensuring the flow of finance top agri-food systems? And why is it so important to the risk agricultural value chains?
in Malawi, it's true that we really do not get adequate support for the agriculture sector and the support for agri-food systems, which is at all levels of agri-food systems, that is production, transportation, storage, and consumption, and what is needed. The main problem is that the financial institutions consider the agriculture sector so risky, and that is complicated or compounded by our setting in the country, that much of our farming or agricultural activities are reliant on rain-fed. So the financial institutions are justified to say, what if rain doesn't come? That means there will be no production. Then the link that is missing in de-risking the agriculture sector in Malawi has been the rolling out extensive irrigation. Because the main risk that we have for any stakeholder to love or to prefer financing agriculture is the availability of water. If we have our agriculture relying on irrigation, it's practically de-risking the risk that is very pronounced. So if I'm to give one critical thing that ought to be done, is ensuring irrigation, and in that agriculture should not be in seasons, to say the rainy season. It should be in cycles, 2-3 cycles. Even the financiers will know that if there is water in a farm or in an estate, it's whether rain doesn't come, but the irrigation will provide the water that is needed for agriculture, and it will really de-risk the sector. Other than that, the focus on irrigation is the scaling up of the agricultural insurance. Insurance in general, the uptake has been very low, but in agriculture, it's even worse. People do not even prefer to insure their crops, let alone their properties. So rolling out or scaling up the agriculture insurance is one link that can really boost the agri-food systems and also make the sector so not that risky. Thank you so much.
Thank you. Thank you so much, Mr. Boyd Hamela, for your insight. Now I will ask the distinguished Honorable Yakuliga Fred Bueno, Minister of State for Agriculture for Uganda, to join us. Honorable, you're welcome. Do we have Honorable Bueno on the platform from Uganda?
Yes, he's here. He was here anyway.
Honorable Bueno, can you hear us?
Honorable Chakulaga.
Honorable Chakulaga Bueno, can you hear us?
I'll try to reach him, Ambassador. Maybe we can
reach him. Let me move to Mr. Abdul Hakim Anti, Director of Food Security and Climate Change in the Prime Minister's Office of Somalia. You're welcome, sir. Can you hear us?
Yes, I can hear, Ambassador. Thank you so much for having me.
Yeah, welcome. What policies, regulations, and initiatives in strengthening access to finance in food systems has worked well in your country, Somalia? And what lessons have you learned from this process?
Well, thank you so much. I mean, I join other colleagues in standing protocols and observing all of it. So happy to be present in this important discussion. Malabo Montpellier. So is that we are coming out from a deep protracted conflict that has really challenged and exposed our vulnerability in a deep and predictable way. I think we are now have quite a number of lessons and initiatives that are working well for us. Number one, we have very strong private sector-led economic growth in the country, and most of our private sectors are mainly accessing to different capitals, primarily within the banks, but as well as within the diaspora. And I think one of the colleagues earlier on has mentioned that, the importance of having the diaspora resources into the broader agri investment in the continent is conspicuously is missing. That's number one. Number two, what also worked for us very well is now currently we have a national transformational plan, which is the country's development plan for the next 5 years. It articulates broad visions, the national resilience pillar that is within the national development plan. And this resilience development plan has captures the significant resources that is allocated for the national budget, and it encompasses in agriculture, fishery, water, and all the productive sectors. So these are national government-led policies and regulations that are working well with us. But also we have, like I said, a very strong private sector that are really underpinning the development and the growth of our agricultural sector. I mean, agriculture remains the backbone of Somalia's economic growth, makes of well over 55% of our total GDP. And we are probably an agri-based economy than we are in other informal sectors. So I would say, strong, very vibrant private sector, but coupled with strong government institutions that are now building, that are now laying out frameworks, and that are laying out. And then also we have the national food system pathways, which I should definitely also mention, which is very important. The national food pathway system has been adopted both national government as well as the state level. We are operating in a federal structure where we have a government here in Mogadishu, but also have a state level governments that are also working closely with us to coordinate on the national food pathway food systems, whether it's in a policy coherence, regulations, infrastructure, so on and so forth. So those are the things that are working currently well with us, but it's also an opportunity for Somalia also to move away from a acute dependence on humanitarian investment over the last 30 plus years, but investing in the agricultural sector as we go along.
Thank you, Abdul Hakim. I took note that the government of Somalia has made meaningful efforts to address food security challenges. In particular, Somalia stands out for its commitment and investment to transform its livestock industry and exports. Kindly, can you tell us more about this? And why do you feel public and private finance is so crucial for agri-food systems transformation?
I think it's a crystal clear. Why do we need a public-private partnership? I think we are now entering into uncharted time, where the financial landscape is getting extremely uncertain by the day. And as previous colleagues have alluded and mentioned, is that the financial space or the global financial architecture is dwindling. And we just came back from Seville, Spain, and Addis Ababa last week. And the central discussion of the conversation was, how do we make sure that we mobilize financial resources beyond the ODI, beyond the development cooperation? And this is where definitely the private sector is critical, important. Those kind of a blended approach to finance in the agricultural sector is very important. And I think, countries such as Somalia, where we are heavily dependent on a private sector of a diaspora investment, informal economy, I think it's incumbent upon us to really build on that. And we have, within the National Transformational Plan that I have mentioned earlier on, I think it articulates very well how the private sector is not only part of the implementation or co-investment, but they have been the primary partner from the word go as we were designing and crafting the National Transformational Plan last year. And they have been all the way with us on a step-by-step to add their contribution and inputs and thought on how we can have a very robust private and public sector. And again, you know, countries such as Somalia, countries that are facing and exposed to triple nexus of challenges, of climate, of conflict, of a severe food insecurity. I think the most critical element is how do you ensure that you tap and bring in your strength. And our strength lies in partnering with the private sector, which we believe are doing far better. We have a very strong digital economy. Our telecommunication industry is far better than, or we're doing very well. We have a mobile money that is circulating $600 to $700 million a day. Our private sector are also financing those smallholder, farmers in the rural area. Though our financial inclusion is not up to the satisfactory level, but I think, as time goes, we are really building, and our private sector are very much understanding the need for us to move away from our 30+ years of dependence on humanitarian assistance that has been only saving lives, but has put and undermined our development policies and priority. And that's why the private sector and the public-private sector partnership is not only important for the development, but also it's important for the economic growth. And this is where I think we're putting a heavy emphasis in it, and it's very well aligned within our development plan.
Rakim, the other component is very important to us. If you can briefly share with us more about the commitment and investments of Somalia to transforming its livestock industry and exports. If you can be very brief, but we would like to hear your quick insights on that.
I'll be very brief. The National Transformational Plan is an ambition development plan, and it proposes $30 billion for the next 5 years, of which 30% of that allocation is intended to go into the agriculture and livestock and fishery sector. So we're putting nearly 1/3 of our national budget, if not more, for the transformation of livestock and agriculture. And we are doing this in partnership and in close partnership with our development and multilateral development banks, such as World Bank, African Development Bank, Islamic Development Bank, and also IFIs, the likes of IFAD, and they have been also working with us. So we have a very strong ambition plan. I think Somalia, a country that has been really on the front line of suffering over years of cyclical humanitarian crisis. I think no country has put in more resources and more money within the sub-Saharan countries than us, because of we have lived through a very difficult time. We know the price, we know the consequence, and we know when you put the agriculture and the livestock on the margins, we know the consequence. And that's why we're now putting at the top of the national development plan. And I think the president and our prime minister have been all along making that clear, that priority. He made his statement in Addis Ababa and said that we are putting every resource and penny into transforming in our agriculture, but also very much aligned with CAADP in the Kampala Declaration, but also aligned with the national food system pathways that has been adopted, that Somalia was proudly been part of since 2022 in Rome. So we're very much aligned. We're putting a significant amount of resources, but also organizing our internal policy cohesions.
Mr. Abdul Hakim Anti, thank you for your very valuable insights.
Thank you so much.
I will call on our sister, Ms. Latifa Ridani, Chef de Division Stratégie à Point Focal Transformation de Système Alimentaire of Morocco. Ma'am, if you can join us on the platform. Do we have Ms. Latifa on the platform? Is Ms. Latifa on the platform?
Oui, merci, professeur Mahmoudou. Excellence, Madame Alaoui, Madame l'ambassadeur Alaoui, Monsieur Mayak, Professeur Van Braun, Docteur Badian, honorables membres et représentants des pays africains. Tout d'abord, je tiens à vous remercier. Permettez-moi tout d'abord de partager avec vous une présentation comme support de mon intervention. Donc, tout d'abord, je tiens à remercier les organisateurs de nous avoir donné cette opportunité de parler de l'expérience du Royaume du Maroc dans la transformation des systèmes alimentaires, en particulier les aspects qui sont liés au financement des besoins d'investissement. Mais avant ça, permettez-moi de mentionner la place qu'occupe l'agriculture dans la politique publique, tout en donnant un aperçu sur les stratégies agricoles au Maroc. Je présenterai ensuite l'approche et les innovations en matière de financement qui sont adoptées pour appuyer ces stratégies agricoles. Donc, le Maroc, il a donné depuis longtemps une importance qui est capitale pour le secteur agricole et vu son importance économique et sociale. Donc, depuis plus de 15 ans, le Maroc a engagé une réforme qui est profonde de son secteur agricole pour en faire un moteur de croissance et d'emploi et de résilience face au changement climatique et aux mutations du marché. Dans ce cadre, il a adopté deux stratégies. Depuis 15 ans, on a adopté deux stratégies. D'abord, il y a le plan Maroc vert qui est de 2008 à 2020, qui a modernisé le secteur et renforcé la productivité et donné une importance à la structuration des filières agricoles, et la génération green adoptée pour la période 2020-2030, permettant de consolider les acquis du PMV en plaçant l'élément humain au cœur du développement. Donc, on voit bien ici la vision de lancement sur la diapo du lancement du plan Maroc vert qui a fait de l'agriculture une priorité nationale. Un moteur de développement économique et social avec deux piliers, un pilier qui est adressé à l'agriculture moderne, un autre adressé à l'agriculture solidaire, avec un ensemble de programmes et de mesures transversaux. L'approche intégrée en matière de financement des systèmes agroalimentaires pour le plan Maroc vert, elle a combiné à la fois une vision qui est politique ambitieuse, des financements qui sont innovants, mais également une coordination institutionnelle qui est efficace, qui a permis de créer un environnement propice à l'environnement des affaires et à l'émergence des systèmes agroalimentaires qui sont inclusifs, résilients et compétitifs. Donc, à titre d'exemple, en matière d'innovation institutionnelle, on va mentionner la création de nouvelles structures avec le plan Maroc vert, notamment l'Agence de développement agricole, c'est venu dans la présentation de Mme Aïcha, comme un interlocuteur unique pour l'investissement dans le secteur agricole. Il y a l'Office national de sécurité sanitaire agricole pour les aspects de sécurité sanitaire des produits agricoles et alimentaires. Il y a l'Agence nationale de développement des zones oasiennes et de l'Arganier pour accompagner le développement des zones vulnérables et des oasis, et l'Office national de conseil agricole comme office de proximité auprès des agriculteurs pour leurs conseils et encadrement. Avec la génération green, et comme il y a eu des chantiers qui sont nouveaux, notamment la protection sociale généralisée au Maroc, et également pour les secteurs agricoles, donc pour les agricultures, il y a eu des créations de structures administratives qui sont dédiées au sein des départements au niveau central, régional et provincial pour accompagner ce chantier. Il y a eu également la création d'un pôle digital de l'agriculture et l'observatoire de la sécheresse pour accompagner les aspects de digitalisation. Donc, en plus de ceci, des efforts considérables ont été, il y a eu également des aspects de contractualisation.
Madame Latifa.
Oui, Monsieur Mohamedou.
Yeah, Ms. Latifa, this is not a presentation segment. This is a Q&A, and I have two questions for you.
Yeah.
And we have a very limited time, so it's not a format for a presentation. Apologies for that. If you don't mind, we'll just ask you two questions, and you can briefly answer them. And you can share the presentation that we can share with the participants, if you don't mind, please.
Okay.
Is that okay?
Yes.
Yes. The question we have for you is, your country, Morocco, has shown high-level leadership to overhaul its agri-food systems through flagship initiatives such as the Plan Maroc Vert. What challenges have been encountered in that journey of attracting the needed finance in the transformation of Morocco's agri-food systems? And if you can be brief, please.
D'accord, monsieur. Donc, monsieur Mamadou, exactement, c'est ce que j'étais en train de présenter. Le Maroc, il a pu mobiliser un ensemble de types de financement qui sont différents, allant de tout ce qui est investissement public et privé, tout ce qui est incitations qui sont accordées dans le cadre du Fonds de développement agricole mentionné dans la présentation de Madame Aïcha, tout ce qui est partenariat public-privé pour le secteur des terres agricoles et de l'irrigation, mais également tout ce qui est partenaire technique et financier, un ensemble de types de bailleurs de fonds, mais également des institutions qui sont nationales, comme l'INDH, l'Initiative nationale de développement humain. Il a aussi pu assurer les assurances agricoles pour les agriculteurs, la finance climat, la facilitation de l'accès au financement et sa garantie, également des prélèvements de cotisations auprès des interprofessions qui servent les intérêts des interprofessions agricoles pour le développement des filières et leur organisation. Mais bien sûr qu'il y a eu des défis et il en reste toujours. Parmi les défis, on peut mentionner des garanties qui sont élevées, qui sont imposées par les banques. Donc, ça reste un défi qui est important et ils exigent des engagements qui sont personnels et des taux d'intérêt qui sont jugés relativement élevés pour les petits agriculteurs et pour les entrepreneurs, les petits entrepreneurs qui démarrent, les jeunes. Il y a également tout ce qui est vulnérabilité structurelle aux risques climatiques et économiques qui exposent un peu le secteur à ces risques. Et par suite, il y a une réticence vis-à-vis des bailleurs et des investisseurs pour la mise en place de certains mécanismes de gestion et de couverture de risques. Tout cela, bien sûr, nous interpelle à chercher des financements qui sont innovants, qui mobilisent des ressources publiques, mais également d'autres types de financements et incitent le privé à investir dans le secteur.
Thank you. And the last question I have for you is, access to finance for agri-food SMEs has been cited as a challenge in Morocco. What has Morocco done to support access to finance for your SMEs?
Exactement, pour soutenir les PME pour soutenir les PME, bien sûr, il y a tout ce qui est incitation de l'État et tout ce qui est investissement de l'État pour mettre en place d'abord le cadre qui est important, le cadre d'investissement et de doing business pour les PME. Il y a tout ce qui est incitations qui sont accordées par l'État dans le cadre du Fonds de développement agricole pour soutenir un ensemble d'investissements agricoles privés, à savoir tout ce qui est irrigation, matériel agricole, les unités de valorisation, mais également il y a tout ce qui est technologie innovante et des projets d'agrégation qui lient des grands agriculteurs à des petits agriculteurs pour faire ce moteur pour les entraîner vers le développement. On a cité tout ce qui est finance climat, assurance également, assurance agricole, que ce soit pour les cultures céréales, oléagineux, mais également l'arboriculture fruitière. Il y a tout ce qui est financement bancaire pour encourager les investissements privés et également les organisations professionnelles et les agriculteurs. Et il y a également la facilitation de l'accès au financement et les garanties par la Société nationale de garantie et de financement de l'entreprise, ou TAMWILCO, pour les jeunes qui sont porteurs de projets, pour les entrepreneurs, pour les micro-entreprises, mais également pour les entreprises qui sont exportatrices. Et bien sûr, d'autres types de financement. C'est le cas, par exemple, avec la venue de la génération Green en 2020 et pour 2030. Pour tous les jeunes entrepreneurs, il y a des incitations qui sont spécifiques pour les jeunes, pour les encourager dans l'entrepreneuriat et pour mettre en place leurs projets. En plus de ceci, il y a bien sûr tout ce qui est investissement de l'État et investissement des bailleurs de fonds, d'appui à des bailleurs de fonds pour mettre ce cadre de doing business pour les entreprises.
Thank you very much, Ms. Latifa, for your very valuable insights. And we will certainly share your presentation with all participants. Thank you so much. Now I will move to, yes.
We have two senior government representatives from Rwanda and Uganda who are online but might have to leave soon.
Okay.
So I was wondering if you could have a conversation with them at the same time.
Sure, I will ask the distinguished delegate from Uganda, Honorable Chakulaga, Minister of State for Agriculture, and welcome, sir. Welcome on the platform. What programs and projects are being, can you hear us?
I'm trying to hear you.
Can you hear me now? I can hear you loud and clear.
Yes, sir.
Can you hear me now? I can hear you, but can you hear me?
Not yet. Yes. That is better. That is better now.
Yeah, welcome, Honorable Minister Chakalago, on this very important conversation that we are having with senior government officials.
Thank you very much.
Yes. What programs and projects are being undertaken by your government to enhance the financing of agri-food systems in Uganda? And how are these investments channeled to meet the needs and concerns of SMEs? And if you can be brief, please.
I will be very brief. First of all, I bring you greetings from Uganda. Secondly, regarding your question, before I tackle the projects and programs, allow me to inform you that we have put in place an enabling environment by establishment of the National Food Systems Coordination Committee in the office of the Prime Minister. And the composition of this committee is multi-sectoral. We have also organized and rallied stakeholders behind the National Food Systems pathway. We have also prioritized the research and production of nutrient-rich foods. And we have continued with the improvement of supportive infrastructure across the country, like roads, electricity, and so on and so forth. But coming to your question specifically, since the financial year 2022-2023, the government of Uganda has been implementing a special food and feed security program through direct annual budget support from our own resources, Ugandan resources. And we have aimed at large-scale production of key staple foods for human consumption and animal feeds, with the goal of stabilizing food availability and access for all in the country. Partly because of this intervention, food prices have since been very, very stable. This fund has now been transformed into a special credit facility, interest-free for large-scale farmers that can be used for investing in interventions along the whole food value chain. And here, SMEs are free to access the fund through designated banks. And what happened is that if the SMEs satisfy the conditions of the banks. They will access the money, and when time comes, they will pay back only the principal sum, and the government of Uganda pays the interest. And our core focus remains the need to bring resource-poor households and SMEs much more into the money economy, because in Uganda, a very big portion of the population has been outside the money economy. So the purpose of this is to bring more and more of the SMEs and the households into the money economy. So that's the main one.
Honorable Minister, what are you most proud of in the way that Uganda addressed the finance in agri-food systems? And what challenges have been most satisfying to overcome?
Thank you very much. I think I'm most proud of what in Uganda we call the parish development model. But in brief, the parish development model is simply a financing model for Ugandans that are still outside the money economy. What we have done as government is to put aside $250 million US, which we disburse to the smallest unit of administration in Uganda, the smallest unit called the parish. And we have 10,000 of these. So to each of them, we send the equivalent we send the equivalent of, in our Ugandan money, 100 million shillings to each of these units. And this 100 million shillings goes into capitalizing a small bank at that level, so that the local population can access financing, agricultural financing from this money. We are so proud about this because we are using our own money to solve a very big problem of the agri-food system financing, because the commercial financing is very expensive, and the commercial financiers tend to shun agricultural entrepreneurs because of the risks associated with agriculture. And yet in our country, agriculture insurance is very minimal. We have very many others, but this is the most proud project that we are implementing in Uganda.
Thank you so much, Honorable Minister, Honorable Chakalago Fred Bueno. Thank you for your very valuable insight. Now I will call upon our distinguished representative from the Republic of Rwanda, Dr. Olivier Kamana, the Permanent Secretary of the Ministry of Agriculture and Animal Resources in Rwanda. Sir, you're welcome.
Thank you, Ambassador, distinguished guests or protocols observed. I'm very happy to be with you this afternoon. Thank you, sir.
Thank you so much. Your country, Rwanda, has recently adopted its 5th Plan for Strategic Transformation of Agriculture, PSTARS. With immense needs for finance, what do you see as opportunities to enhance the flow of finance for food systems transformation across Rwanda?
Thank you, Ambassador. This 5th phase of the National Agricultural Transformation Strategy is called PSTA 5. So it comes from a French acronym, then it's a Plan stratégique pour la transformation de l'agriculture. It's an innovative policy that is going to be guiding us for the 5 years. We have already completed 1 year because we launched it last year, 2024-2029. And it's an innovative policy that brings in it an aspect of blended finance models to finance food systems. For this, we want to introduce this new model by combining public funds with private sector capital and donor funding for de-risking investments in the agriculture sector. So to get there, the government and European partners are going to create guarantees and insurance schemes and co-investments platform that will be attracting private investments into agriculture and agri-food systems. And as an example, I can cite the private partnership fund that you are creating to support climate smart agriculture and youth-led agribusinesses initiatives. So in addition, this policy aims at building stronger value chains that can attract funding in a sustainable manner. And we are promoting investments in infrastructure such as roads, storage facilities, IT components, and we establish market linkages and processing facilities to reduce post-harvest losses and increase processing for more profitability. Thank you.
Thank you. The other question is, over the years, Rwanda positioned itself as a green destination with huge opportunities to attract climate finance. How is your Ministry of Agriculture and Animal Resources support the actors in agri-food systems to tap in financing opportunities offered by climate finance?
Yes. Thank you, Ambassador. So the Ministry of Agriculture and Animal Resources collaborates with the sister institutions to make sure that we attract green funding into agriculture sector. First of all, we have this policy alignment and strategies alignment. So our PSTA5, even starting from PSTA4, which was the previous plan, all those two policies do integrate climate resilience and sustainable land management. And in parallel, we have recently launched our climate smart agriculture financing strategy. And we are keen to integrate the national determined contribution and the national adaptation plan. So what the ministry does is to support initiatives that are aimed at bringing in the agriculture sector green finance, such as collaboration with the Rwanda Green Fund, FONERWA, and to collaborate with independent researchers, public institutions that are aiming at attracting funding, for example, the GCF, the GEF, and also the Adaptation Fund. We have already a number of proposals that were supported by the ministry that were submitted for funding. And also we are welcoming any other initiatives that can attract funding for the agriculture sector coming from the Green Fund. Thank you.
Thank you. Following the approval of 300 million USD World Bank funded commercialization and the Risking for Agricultural Transformation Project, CDAT, in 2022, what success do you anticipate to unlock the flow of finance in food systems? And if you can be brief, please.
Yes. Thank you, Ambassador. So for this project is the CDAT project that is World Bank funded. It's a project that really is going to reshape the whole landscape in our country. So we expect this project to fund, first of all, the insurance and increase the risking for of our agriculture sector. Already 20 million USD have been allocated to support our national agriculture insurance scheme. And this has already started to give tangible results. We are seeing progressively the increase of insurance uptake among our farmers, and the results are really encouraging. And we are already beyond the targets that we are set previously at the beginning of the our five-year strategic plan. We are really proud of it. We see how agriculture insurance is booming and progressing. And this is one of the tangible results that we expect from this project. Secondly, as it has even been presented in the report, 61.5 million USD from this project have been allocated to the Development Bank of Rwanda. And the uptake is also progressively increasing. We can now confirm that more than 40% of the amount to be allocated to credits has been already absorbed, and also applications are still coming, which is really encouraging. This is going to change the perception from our farmers and investors on the credit, and also to integrate the aspect of the risking. So we expect that this project is going really to reshape our agriculture sector. We are going to see more farmers going for credits and increasing their businesses. This is really encouraging, and we hope a lot from these projects. And the results so far that we are noticing are highly encouraging. Thank you, sir.
Thank you, Mr. Olivier Kamana, for your very valuable insights and contribution. Now I'm coming to the tail end of this segment. Do we have the distinguished delegation from Ghana on the platform?
Prof, I don't see Ghana here.
Okay.
The speaker.
Okay, since we do not have Ghana, that was the last contribution I have for this roundtable, and I want to take this opportunity to convey our appreciation and gratitude to the honorable ministers and the senior government distinguished leadership that joined us and shared their very valuable insight. We thank them all and we appreciate their contributions. That ends this segment of the roundtable, and I hand over back to you. I saw Dr. Miyaki's hand raised. I'm not sure whether he's still on the floor or was...
It was an error. It was an error, yeah.
Okay, thank you, sir. Thank you so much, and good to have you here. Thank you so much. I hand back the platform to you.
Thank you so much, Prof, for your wonderful moderation. We were so delighted to learn these experiences from countries around Africa who are taking steps and implementing institutional interventions to advance funding in the agri-food systems. We are now moving on to the closing session, but before then, we would like to have one invited reaction from a stakeholder. I will now invite Dr. Andreas Shomaya. He's the head of division for food and nutrition security, global food policy fisheries at the German Federal Ministry for Economic Cooperation and Development, BMC. Over to you, sir, for your reaction to this conversation.
Okay, thank you very much, Excellencies, members of the Malabo Montpellier panel, ladies and gentlemen, and particularly to the forum co-chairs, Dr. Mayaki and Dr. Alawi. Greatly important gathering here, even though we met all together a week ago in Addis Ababa on the UNFSS +4 stock taking. The question and the topic of agribusiness finance is extremely important. Let me start with some of the insights already talked about. And I think it was very, very good that we were not sheerly looking at the financial sector, because the financial sector has its own challenges. But when we talk about risk reduction, we also need to take into account land-use tenure reforms. We need to take into account policy reforms, and this is what the German Ministry of Development Cooperation is doing. And I have to say that we are just refining our new strategy, and my minister, Reem Alabali Radovan, is just committed to combating hunger and poverty, and we will continue also our efforts to transform agriculture and food systems globally in full alignment with the Rio Conventions and the Agenda 2030. Our new strategy will look at food security and not only about combating hunger, but with healthy nutrition and sustainable agriculture as a focus. So improving children's educational opportunities, ease the burden on the global healthcare system, limit biodiversity loss and climate change, and create jobs and economic growth in rural area. This is where our broader strategy will lead to. I also met last week at the EU several representatives from involved in the CADEP, and we're also invested in country-led frameworks, the NIPES, which we will support. And I hope this CADEP process will take off, especially with all the research and the discussions which we're just having now. From my understanding, it is extremely crucial that when we talk about effective development cooperation, and this is probably also the role which I have here at this panel in making a statement, we really have to take into account that we are dealing with a high rate of complexity. And by using this term de-risking, I think we are sometimes a bit too undercomplex. Because de-risking as alone as we have to admit that there are risks, and then what all of the presenters already said, that we have to target the de-risking tools to unlock the private capital, and we have to create functioning markets, because governments in itself are not probably the most innovative instrument to make the agriculture sector more productive and therefore also more reliable for food security. We, together also with KfW, invest, for example, in Aceli, which is a great example. It shares risks with lenders, making finance for SMEs more attractive. And this is why we are planning also to support Aceli to help to bring their approach to scale. I think this helps. And the IFAD colleague already mentioned it. We are financing the private sector financing program together with Canada, Finland, and others. Let me refer to one more thing. We have to look at the public spending in agriculture. We're talking about $800 billion in agricultural subsidies worldwide. And these subsidies are often price distorting and harmful to the environment. BMZ has therefore launched a project with the World Bank to help partner countries redirect these harmful subsidies, turning them into transformation rather than distortion. In Malawi, which is also one of the case studies here, we are already seeing first promising results of this work. So, and what we're also going to further invest into is high quality of information in our decision making needs better data infrastructure. Therefore, we are going to invest more in the IPC system, the Global Hunger Index, national information platforms on nutrition, and other instruments that provide data either directly or through FAO. Yeah, let me conclude. It's great that we exchanged on that topic, which is extremely relevant, but we really have to take into account that complexity needs local knowledge to solve these complex systems, and we need incentives and information. I think this is extremely important when we are constructing and designing our programs, and this is something which is KfW is feedbacking me when we are setting up new projects, that we have to take into account this aspect. Thank you very much.
Thank you, sir, and thank you for sharing those insights on the work of BMZ. We're delighted to have you here. So we are now moving to the closing session. But before we invite our forum co-chairs, we would love to hear your opinion on the report and on the forum. Please click the link in the chat and complete a very short survey that has been shared to you by the MAMO panel program. With that said, let me invite our first forum co-chair. He needs no introduction. African Union Special Envoy for Food Systems, former Prime Minister of Niger, and now incoming co-chair of the Malabo Montpellier Forum, Dr. Ibrahim Mayaki. Your Excellency.
Okay. Thank you very much. Do you hear me?
Yes, sir, we can hear you.
Okay, thank you. It's really a great pleasure and an honor to be here. And I would start by saying that replacing Prime Minister Haile Mariam is a very hard task. I've known Prime Minister Haile Mariam for quite a long time, and I've get to know that theoretically and practically, he is a genius in that domain of food systems transformation, linked to a strong leadership, but the leadership which puts the hands in concrete issues. So I don't think I'll be able to be at his level, but I will try. It's a motivation. I will try. Let me recognize Professor Joachim von Braun and Ambassador Alawi, and say how pleased I am to be together with you. I'm sure that I will most certainly learn a lot and greet Her Excellencies ministers and the distinguished guests, and standing on the established protocol. And thank Professor Mamadou for his moderation that I followed, which was really extremely elegant and up to the point. It's the Spanish have a say, which is llover sobre lo mojado, which can be translated, but it's a bad translation. Raining on something which is already wet, which means repeating things that have been already said. So I would not like to engage in that, even though it's difficult, but because I will be repeating a certain number of things. But before doing so, let me reiterate my thanks for accepting me as a co-chair. Now, I think most of the things we have discussed can be regrouped in three blocks. The first block, which I see, is about the link between agri-food systems transformation and economic policy. And that is the key value added that the Malabo Declaration brought after Maputo. And it meant a lot. It meant bringing on the table agri-food systems transformation in that triptych linking growth, economic growth, job creation, and industrialization. And somehow financing agri-food systems transformation is also the financing of that triptych within a context of, as we have heard, land degradation, climate issues, and the context of demographic growth. We heard earlier, and the Sophie report highlighted it, but global hunger declines worldwide, but is rising in Africa and in Western Asia. Let us remember, we were 300 million inhabitants in Africa in the 60s. Today, we are 1.5, and we have not gone through our demographic transition, and we will be 2.x in 2050. And most of the 2.5 we are talking about are already born and with us. And I think this is what creates the complexity that Dr. Andrea Schomeyer referred to. Why is it complex? Because if we go at the same speed, the changes will not be impactful. So we need to accelerate. Acceleration, I think, is the critical dimension of agri-food systems transformation. Otherwise, global hunger will continue to rise. So whatever we do needs to be accelerated. And the question that we need to answer is, how do we accelerate in terms of institutional innovation, in terms of innovation in financing, in terms of capacity building, in terms of technical assistance? I think the key question that we need to answer is, how do we accelerate? And the second block, where I tried to gather the issues that were related, and the report is really extremely interesting and extremely pertinent and can be used by policymakers. So I would like to congratulate the authors and how this report was shaped. So the second block, for me, in my view, can have two groups of solutions. The financing solutions that are coming from the top, and the financing solutions that are coming from the bottom. And we heard from Malawi, from Morocco, from Rwanda, all these specific funds, agri development funds, skills development funds. These are instruments coming from the top. And you have instruments coming from the bottom, which are about fintech, about digital platforms. So that combination of solutions coming from the top and solutions coming from the bottom is also a lesson for us in terms of policy design. We can no longer have policies designed top-down. There needs to be a combination of top-down processes and bottom-up processes. And that's where really innovation will be able to take place and acceleration will be able to take place. A singular factor, which was mentioned, I think, by Ismail, was the fact that we need to advance all sectors at the same time, because these linkages with health, with education, with infrastructure needs a kind of whole government approach, and all sectors have to move at the same time. And this adds to the complexity and acceleration. So unavoidably, new tools will have to be put in place. And the block 3 of what I heard, and which I wanted to highlight in my conclusions, is that the implementation of Kampala's commitment of $100 billion with a reaffirmation of the 10% allocation of public funds to, I wouldn't say the sector, to the agri-food systems transformation ecosystem, the implementation of that commitment needs to be carefully thought about. And that's where I think all the discussions that have taken place or the interventions that have taken place feed the way this commitment can be implemented. But this commitment, in order to be implemented, will also bring somehow, I think, humbly, a review of the governance systems of the agri-food system transformation space. Agri-food systems transformations, in its complexity and its necessity to accelerate, needs specific and adapted governance systems which also need new types of leadership. I'm not talking about individual leadership. I'm talking about collective leadership. Leadership from the private sector, from civil society organization, from the public sector. A new type of leadership will be needed in order to face complexity and facilitate acceleration. And the last point I will mention, which was highlighted by Professor von Braun at the beginning, is the dimension of integrated rural development with agri-food systems transformation financing. I think this is key. This is key because our space currently, geographically, is changing in a quite significant manner because of the rate of urbanization. But the urbanization, the model of urbanization that we are observing is radically different from what has been observed historically, because we no longer know exactly the difference between a town and a village. So we have in all the continent, we have a series, a continuum of intermediary cities which are reshaping our geography. And then thinking about integrated rural development is also an adaptation to that new geographical space with this continuum of intermediary cities. So I will end here and reiterate all the honor I feel to be admitted in your space. Reiterate that getting to the level of Prime Minister Ali Mariam will be hard, but I'm motivated to do the best I can, and really congratulate the MAMO panel for all the great work it is doing, all the passion it brings, and how linked closely it is with enhancing intelligence in agri-food system transformation. And there is someone here which I would like to also recognize fondly, is Dr. Badian, from whom I've learned a lot. So thank you very much.
Thank you, Your Excellency. Thank you for those poignant remarks. We appreciate your presence and your leadership. And now it's time to hear some final words from Her Excellency Ambassador Alawi. Your Excellency?
Sound. Yeah, I just reactivated the sound. Can you hear me?
Yes, ma'am, we can hear you.
Yes? Okay, can you hear me?
Yes, ma'am, we can hear you.
Okay, thank you very much. Excellencies, ladies and gentlemen, all protocols observed. As we come to the end of the 16th Malabo Montpellier forum, I would like to acknowledge the tremendous efforts made by all stakeholders in boosting finance towards transforming agri-food systems in difficult contexts, I must admit. These past years have been challenging for the world at large, and particularly for our continent. The health, economic, and geopolitical crises have all come together in a perfect storm to initiate a food security crisis too. The cost of the inputs have soared, and sometimes inputs are not available in needed quantities. As if this is not enough, weather-induced climate shocks hurt the most vulnerable, due, among other things, to failed crops and livestock losses, adding a burden to our growing economies. Today's discussions were critical as our nations reflect on the de-risking our agri-food systems to attract some much-needed finance, as well as capital in soft and hard infrastructure, to transform our food system and making them along this effort more sexy to attract funders' investments. The Kampala Declaration Agenda 2063 and the launched Malabo Montpellier panel report advocate coordinated innovative and inclusive investments grounded in robust national systems and regional partnerships. Let us be clear, financing agri-food systems is policy imperative and a strategic investment in food security, regional stability, and shared prosperity on our continent. The Kampala Declaration offers the political will. The Malabo Montpellier report, MONEYWISE, Policy Innovations to Finance Africa's Agri-Food Systems, offers a roadmap. What we now need is bold, coordinated action. I encourage you to disseminate this report to our colleagues and partners. I do hope that the examples and the strong recommendations provided by the report, and of course all the discussions of ours today, will inspire adaptation, replication, and scaling up by many in governments, private sector, and development partners. As you can notice, there are no really concluding remarks to be made. Rather, it's a call for a new era for decisive action for our continent in these troubled times. It is indeed another opportunity for our governments faced with the decline in multilateral and bilateral funding, which is as well shifting towards crisis and energy requirements to drive the financing of the domain central to African economies, but whose funding remains under the level required for meaningful transformation of our agri-food systems. This strategic move will allow to align better systems with the integrated rural development, very much mentioned here, respective national priorities, and to learn to navigate world hyper-complexity, I should add. And thank you, Mr. Ibrahim, becoming new chair, to have mentioned this complexity, which has been hinted to as well by Ismahan Louafi when she talks of there are no easy solutions and people have to catch better all this meaning. So countries can optimize efficiency through better coordination and PPS, improve inclusiveness thanks to targeted measures for the vulnerable groups to access inputs and credit. Moreover, in that respect, coming from the education world, allow me to insist on the imperative of improving and expanding literacy at large on our continent, and digital and financial literacy in particular, to ensure the enforcement of effective and innovative financial mechanisms, but not only. This training is all the more important that the progress in the digital technology is growing faster than the global expertise in this field of average citizens, and especially in the rural world. Along the recommendation, allow me to call as well on the financial institutions which are digitalizing their services and seeking savings to make sure to keep enough human resources available to attend, help, and advise the agri-food systems customers in the transition periods. At the end of the day, it is sovereignty, solidarity, which will gain ground on the welfare of all Africans who are trapped in geopolitical upheavals and overbidding. Let's leave this forum more inspired and mobilized around our continental commitments. I remain convinced that together we can finance the transformation of Africa's agri-food systems we ambition and that we deserve. Thank you.
Thank you, Excellency, for your closing remarks. And with that, we have come to the end of the 16th Malabo Montpellier Forum. We have shared the link in the chat. Click the link to go to the website, mamopanel.org. And under resources, you can click Financing Agri-Food Systems. There you will find the full report and the 3 country case studies for Malawi, Morocco, and Rwanda. If you haven't already, please join our mailing list. Again, we have shared the link in the chat. What can I say? Read the report, spread the word. See you next time. Take care.
Thank you. Thank you. Thank you, everybody who joined us. Bye-bye.
Thank you. Bye-bye.
Thank you.
On appuie seulement sur le...
Je vois pas le cursus ici.